Boom! Good morning, everybody. I'm excited to be here. Spencer Israel. Happy Tuesday, everybody. We got a great show prepared today. So if you've never seen or listened to or watched whatever a Benzinga All Access show, let me tell you what's about to happen. We've got like 8 or 9 interviews lined up for the next couple of hours. I'm going to be having one-on-one conversations with executives. I'm talking founders, I'm talking CEOs, I'm talking presidents, founders of companies that are all in the emerging stages, right? Either they're in an emerging industry or they're in an established industry, but they're emerging within that space. We've got miners, we've got blockchain plays, we've got a wine company, we've got a media company, we got consumer packaged goods, we got a lot of biotech, a lot of really cool companies today. I'm going to be having one-on-one conversations with those executives about them, about their company, about where they've been, where they are, where they're going. And again, the point of this show is to take a step back from the rat race, right? We are all super focused all the time on stocks, this and the 1 minute charts and the daily returns and the S&P and the NASDAQ and that's all fun. But there is more to life than the stock market on any given day. The point here is to step back and actually get into these stories a little bit of these companies. Not so much get into like, what is your stock doing? Why is it up? Why is it down? Why is it sideways? For purposes of this show, frankly, I really don't care. That's not the point, right? The point is, what is the story? Because story is kind of everything, right? It kind of is. Doesn't matter if you're in a bull market or bear market, story matters. And every company has a story, and every person has a story. So that's kind of the point here. We will try our best in the time that we have to uncover said stories. Before I proceed any further, some housekeeping items. Housekeeping item number 1, hit that like button, please, and thank you. I'd appreciate that. Number 2, reminder that all the companies that are on today's show have partnered with Benzinga to be here. That being said, nobody knows what I'm going to ask them, and even better, no one knows what you are going to ask them. Yes, if you have a question at any point, at any time, drop your question in the live chat. We will do our best. We're going to try to save those questions to the end of each segment, but we will do our best to get to all the questions that are asked on today's show. So they don't know what I'm going to ask. They definitely don't know what you're going to ask. I don't even know what you're going to ask, right? So drop your questions in there. So there's that. And number 3, before we get to our first guest, I want to say that we're actually running a promotion today with a company called TOMDF. You may have heard of it. They bring together shareholders and customers. And the idea here is basically, if you're a shareholder, you should be entitled to some rewards for owning some stock in a company. This video will tell you a little bit about
that. What is ticker? That's right, ticker with 2 I's, just like you. Because it's for you, for investing, for stock perks, for connecting you to public companies who reward you as a shareholder, as a brand lover. That's why people can't stop tickering. Ticker, where investors discover shareholder perks and consumers become investors in the brands they love. Ticker. Start tickering today.
All right, so to learn more and see what companies are on there, go to ticker.com/Benzinga. That's TIICKER.com/Benzinga. It's on the screen. It should be in the chat. It's definitely in the description. So check it out. Viewers of this show will get a $20 Amazon gift card for signing up and linking ticker to your brokerage. All you have to do is create an account, confirm your email, and then after you confirm your email, on that next page there's a box, and it says Benzinga All Access Listener. Just check that box, and you'll be eligible to receive a $20 gift card from Amazon for free from Ticker. Just follow those steps, and you have to keep your account there for. They're going to send it after 30 days, so you can't just open the account and close it. So it'll be a few weeks out. But again, ticker.com, TIICR.com/Benzinga. Check it out. Shareholders, rewards coming together. Okay, that being said, let's bring on our first company today. We're talking mining. We're talking gold. We're talking to U.S. Gold Corp and their founder, Ed Karr. And before I bring Ed on, I just have one more video to play. This is actually about U.S. Gold Corp, so this is relevant to them. And this video will tell you a little bit. It'll give you the high-level overview on what U.S. Gold Corp is doing. And after the video ends, we will actually talk to Ed about some of the stuff in the video. So let's go ahead and roll that back.
U.S. Gold Corp is a publicly traded company on the NASDAQ with the symbol USAU. Our flagship asset is the CK Gold project in the state of Wyoming.
With the metal prices where they are, both gold and copper, I took a look at the project and did some due diligence on it. And what I found was it was a simple project, open pit mine. It really has a lot going for it.
Our president and CEO, George B., has a 40-year career in the mining industry. Having someone like him, people know that we are serious of pushing this project forward to production.
The physical attributes of the CK Gold project are that it outcrops on surface. It has a very low stripping ratio, so we get immediately into material which we can process and create value. Also, from the perspective of its geographic location, it is ideally suited.
Wyoming's an amazing state to have an infrastructure development project like the CK Gold project.
We've found Wyoming to be very hospitable toward the resource sector. We feel that we can put CK Gold project into production on a fairly expedited basis.
The state has a 5% royalty, and those monies are earmarked for the state of Wyoming K-12 educational school budget. And we have a lot of infrastructure very close by, including a rail spur and a rail line 2.5 miles north, so we can potentially ship diesel fuel in, ship concentrate out, and have a lot of future cost savings.
The open pit mining allows us to extract the mineral that we're interested in. And the product is a copper and gold concentrate. That concentrate is dried and shipped off to off-site smelters. So one of the main features about the CK Gold project is that we do not employ any hazardous chemicals, we don't have a tailings dam, and we don't have any refinery or smokestack.
The copper that we produce is very much in demand for windmills, for solar panels, for electric vehicles. And we really think that this project can have a green mining aspect to it.
You're always concerned about the post-mining land use. We're creating a hole in the ground which has a potential to be used in the long-term need for water retention and storage for the city of Cheyenne.
Some of the future possibilities we are currently exploring are looking at the non-mineralized material to sell as aggregate.
We think there may well be a market for that waste rock. So that is all very good for the economics.
Gold is one of the world's oldest known stores of value. Our CK Gold project and all of our exploration projects are located in the United States, providing gold, copper, valuable minerals, silver, and American jobs in mining-friendly Western states.
We feel that we're making a great contribution. So that really excites me about the project. And to be frank with you, I like to see hard assets. I think gold should be part of everybody's portfolio.
All right, let's bring on Ed. Ed, what's up, man? How we doing? How's your morning going?
Hey, Spencer, I'm doing great. How about you?
Actually, I should say it's not morning for you because you're coming to us from Europe. But so how's your day going?
Correct. My day's going really well, really well. Early afternoon for me. Thanks for having us here.
Before we actually get to some of the things that were discussed in the video, I just want to, I always like to start with the background, the person's background. Like I said, everyone's got a story. What is yours?
Well, I started, Spencer, in the financial business about almost 30 years ago now. So you can see I have a couple gray hairs. Been doing this for a little while.
Yep.
Started in New York on Wall Street with a major wirehouse firm. Then I had an opportunity to move over to Europe in the mid 1990s to run an investment bank, asset management firm. I did that and ultimately wound up in Geneva, Switzerland. So I've been there for about 24 years now. I've established several different asset management, investment banking companies. And I've also founded a lot of different companies along the way, kind of one of these serial entrepreneurs. I've been on lots of different boards, both on American and Canadian publicly traded companies, and been CEO of a couple different companies. And so, yeah, that's kind of my background in a nutshell.
All right. U.S. Gold Corp. That's of course where you are now. That's why you're here today. That's what we're doing here. So some questions I have from that video that I want to start because I was taking notes. There were some things that I never want to assume that everyone knows certain terminology or a certain jargon. So there's a couple terms that I thought maybe we could address. One, open pit mine. What is that?
So open pit mine refers to when you have a deposit, Spencer, that you can actually dig a hole in the ground. So it becomes this big open pit, this big hole in the ground. And other mines can be underground. So they could be very, very deep. To go underground, it all becomes an issue of money and economics. So if you have a deposit that is very, very, very high grade and it justifies the expense of going underground, fantastic. But our project in Wyoming called the CK Gold Project will be an open pit. What we have there is a deposit. We know that we have 1.44 million ounces of gold equivalent. It's a gold copper deposit. It comes right up to surface, literally outcrops. You can see some of those rocks in the video that had kind of that greenish copper hue to it. So some of our best mineralized material comes right up to surface. And what we're going to do essentially is dig a big hole in the ground. So think of it like this, Spencer. I know you like sports, right? So think of a big American football, about 1,000 feet long, 600 feet wide, and 600 feet deep, buried in the Wyoming countryside with the stitching just, coming right up to surface. That's what our deposit looks like. We have to dig a big hole and basically extract that football. That's what the open pit mining will be.
What is stripping ratio?
Stripping ratio refers to how much burden you have to take off to get down to the good stuff, the ore, the mineralization. So again, imagine that football and imagine it's 200 feet below surface. So if you had to come in and pre-mine out, bring in some big bulldozers and dump trucks to take off all the sand, all the gravel on top for 200 feet until you get down to that football, that would be called a pre-strip. So your strip ratio in mining is how much overburden material you have to remove. The less, the better. The lower the strip ratio, the better, because you're right into your real, high-grade ore that can generate revenues and cash flow. And that's certainly the case at our project in Wyoming. Some of our best material comes right up to surface. So our first shovels that go in the ground, that'll be some of our best material, and we'll be generating, revenues and cash flow in this project from day one.
All right. So the CK Gold project was, of course, mentioned in the video. I'm just curious, are there other benefits to being in Wyoming aside from tax benefits or anything, anything on the fiscal side? Are there any geographic benefits for being there?
Yeah, there really are. And look, Wyoming is a fantastic state. In the United States, you have states that are pro-mining, pro-resource industry, and you have states that are not so friendly pro-mining. Wyoming is certainly pro-natural resources. You've got a lot of mining. There are coal mines in Wyoming, uranium mines. Just about 3 miles south of us is a big, major industrial granite quarry, a granite mine. There's oil and gas. So the state derives a lot of its revenue off royalties on these deposits, and they know the extractive industries very well. Also, Spencer, important to point out, our CK Gold project, we're on all state of Wyoming ground. It's state of Wyoming claims. Becomes very important. because our only regulatory authority for permitting is the state themselves, the regulators in Cheyenne. There's a lot of great projects in the United States, specifically like Nevada, that are on federal government ground. And there they have to permit with the US federal government authorities. So it takes a much longer time. We believe, Spencer, we can probably have our CK Gold project permitted by mid-2023 and then get this into production very, very rapidly. So Wyoming is a really favorable state to have a project like this.
Okay, so let's sort of get to my next question, which was like, tell us about, you know, the state, the timeline of this project, the CK Gold project. Where are you at in the process? What comes next, et cetera?
Yeah. So we just dropped an updated geological report on December 1st called the pre-feasibility study. Major work went into this. This shows an extremely viable project. We have 1.44 million ounces of gold out there. You know, Spencer, gold today is about $1,770 an ounce. So that's about $2.5 billion worth of metal on our project, gross value. But obviously, it's not worth that gross because you have to extract it. You have to build a mill, you know, to process that material. So our capital in this PFS, looking at about 221 million, we're going to show a production rate of about 108,500 ounces per year and a 10-year life of mine on this project. What's really important, Spencer, to look at on any project is what's called your ASIC. That's your all-in sustaining cost. Ours is coming in at $1,800 an ounce. And let's just assume, I'm not that great at math, let's use easy numbers. Let's assume gold is going to remain at $1,800 an ounce for the next 10 years. And our all-in cost is $800 an ounce. Well, this project could throw off $100 million a year in EBITDA for the next 10 years. You know, big number. So this is a very economic, very viable project. And this PFS, Spencer, was done at $16.25 gold and $3.25 copper. Again, gold today about $17.70, copper is about $4.25. So that's pretty conservative. The next steps going forward, we also did a lot of engineering in this pre-feasibility study. We are going to produce a gold copper concentrate by flotation. So we have already designed the mill, very detailed engineering. We are moving this project right now towards what's called a bankable feasibility study. We'll have that done the first half of next year. That will allow us to file the mine plan permit with the state of Wyoming. That should be a 12-month approval process. So by mid-2023, we have an approved permit. It'll take us about 12 months under our CEO, George B's leadership to build this mill, build this facility. So by mid-2024, we could be in production with this. And I'll tell you, Spencer, today, US Gold Corp only has 7.1 million shares outstanding. You know, I think the stock's just below $10 a share. So huge amount of value for our shareholders in this project.
And so, you know, we're talking a couple of years out here. How are you on just the funding for all that?
Look, our last public filing, we showed $10.8 million in cash. That was our 10K. We are about to file a 10Q coming up this week, I believe. So everyone should keep their eyes on that. That cash number will be down, but our balance sheet is still in very good shape. I'd say we've got enough money to get us well into that permitting process. And just a note to point out, Spencer, it's been a tough time this year for the junior exploration sector, even US Gold Corp. Most of these stocks in this sector are trading right now around 52-week lows, which is just a massive disconnect. Look at what happened today. Producer prices came out. They came in at 0.8% for the month. You know, producer prices, we're running right now, Spencer, at 9.6% annualized. Inflation is here. You know, Jerome Powell's statement that inflation is transitory is going to go down in history as maybe one of the worst statements ever. The only thing that's transitory is his credibility. CPI came out last Friday, and CPI, consumer prices, are running at 6.8%. So inflation is here. All your viewers got to look at that. When you have gold, when you have silver, copper, these are insurance policies against inflation. And although the precious metal prices haven't taken off maybe as much as some of the cryptos or other things, I'm telling you, they're going to go. They really are. In my opinion, 2022 is going to be fantastic timing for this sector.
Yeah, I think a lot of people, Ed, agree with you, but they're just like scratching their heads as far as just the performance of the asset class. Why? Why do you think that is?
Look, it has. It's been a huge head scratcher, and I think a couple different reasons. Number one, certainly the cryptocurrency industry has taken a lot of attention and a lot of the capital away from the more speculative junior exploration sector. And rightly so. They've had phenomenal runs. I am certainly not, Spencer, a crypto basher. I'm well on record saying I think people should own both. I really do. I own both. I think everyone should. But at the end of the day, look, gold's been around for over 2,000 years and used as a medium of exchange. Will Bitcoin be here in 2,000 years? I don't know. Gold will. It certainly will. So I want my money in both. And for me, gold is my insurance policy. I use this to maintain my long-term purchasing power. It's like insurance. I have insurance on my car. I didn't wake up this morning and decide, hey, today's a good day to go get into an accident. But if I do, I want car insurance so I can protect myself. Heaven forbid if I cause some damage or hurt someone else. Gold's the exact same way, And I think at some point this market looks a little long in the tooth. The Fed saying they're going to taper. I hear this big vacuum cleaner in the background. It's not my my cleaning woman cleaning my apartment here. I mean, that's the Fed sucking liquidity out of this market right now. We'll see what they say tomorrow, but they're going to reduce their amount of tapering. Ultimately, they're going to start raising interest rates. And as that happens, we could see a pullback in the general equity market, especially a lot of the high-flying tech stocks that have long duration. I would think that would bring a nice bid into gold and silver, and next year could be setting up very, very well. But it has been frustrating. I thought we'd be higher than we are now. But look, the market's never wrong. Only my opinion of it is.
Right. It's just so interesting too, Ed, because in some respects, since the bottom in last year, right, March, April, the bottom of last year, it does feel like darn near everything has rallied, with the notable exception of gold. So it's just interesting.
And look, Spencer, I think it's like a coiled spring, rubber band, just getting ready. It's stretch. And this thing is getting ready to snap. It really is. When you look at a valuation disconnect, and I'll just point to US Gold Corp, we are trading today below a $70 million market cap. We have cash in the bank. Our project alone in Wyoming has a $323 million net present value, $2.5 billion of metal out there. It's an amazing valuation disconnect. And you find that across this entire sector. You really do. So at some point, we will get a catalyst. We'll see bigger institutional money start flowing into this sector. But people have been making money on their FANG stocks, their Tesla, their Bitcoin, Ethereum, altcoins, etc. So until maybe some of those trends really break and people get scared, it might be a little more choppy, markets for gold and silver.
Okay, so aside from the CK Gold, are there other projects we need to be aware of here?
Yeah, look, we've got 3 other high potential exploration projects in our company, and any one of those in its own right could be a company maker. 2 in Nevada, one called Keystone on the Cortez trend, another one called Maggie Creek on the Carlin trend, and then we have a project in Idaho called the Chalice Gold Project. So all of those are early stage exploration opportunities. We're trying to prove up big discoveries there.
Nice. Okay. If there were any questions in the chat, I hope I did not miss them. I know there was a couple, but I think they were answered. Let me just scroll through right now. Just to clarify, are you a junior or not?
Yeah, we're definitely a junior in that. Usually companies, anything less than $100 million market cap is classified as a junior, so we would be a junior. But different than a lot of Canadian companies, we're traded on the NASDAQ, full NASDAQ listing. We have a stock over $5 a share. A lot of Canadian companies are penny stocks, so anyone can buy us. A lot of brokers in the United States cannot buy all these Canadian juniors because they have compliance issues with stocks below $5 a share.
Right. Ed Karr is the founder of US Gold Corp. The ticker is up on the screen, USAU. That's a good ticker you got there.
Let's go.
Yeah. Ed, always a pleasure to talk with you. Have a great rest of your day. Thanks for joining us on All Access today.
Really appreciate it. Have a great conference.
All right. All right. We are moving right along here to our next speaker here. I've got Natasha Drapeau here with me. She is the vice president of BioSig Technologies. I think we can probably bring her on right now. Let's go ahead and do that. Natasha, how are we doing this morning?
Spencer, good morning. Very well, and very engaging conversation.
All right, we're going to switch gears a little bit, Natasha. It's going to be like whiplash, but we're going from metals and mining to biotech and healthcare. But before we get to that, I was doing some research on you. You've got a bit of an interesting story in terms of how you got here. You've definitely done a lot in your career. So to walk us through like that journey and sort of how you ended up, because look, you were more like you weren't always in this industry, right? So how did you end up here?
Thanks, Spencer. And I think it's a good segue actually from previous presentation, because I was in a similar sector to where Ed was. So I spent most of my career in financial services industry and in fintech, having worked for one of the world's oldest and largest trading companies in London, in the UK. So I saw with my own eyes, how in the industry has advanced based on technological progress and some of the data-driven progress and solutions. So when I met, prior to joining BioSig, when I met the founding group at BioSig with Ken, the chairman and the founder of the company, and some of the original group members, I was immediately drawn to the very simple value proposition, which was all really focusing on, delivering better intelligence to advance one of the most critical areas of our lives, healthcare.
So, okay, walk us through BioSig and what you're actually doing.
Right. So we are a signal processing and acquisition company. Our core competency is in delivering more precise, more clear cardiac signals during the procedures that are called cardiac ablation. And to those viewers that perhaps not that familiar with the field, cardiac ablations are procedures that are being performed to treat heart rhythm disorders, also called as arrhythmias. And they affect over 33 million people worldwide and contribute significantly to hospitalization rates, both in the US and globally. And it is a highly progressive condition, so which means if it's not treated early and it's not treated, it worsens over time. And many patients remain for a period of time, but those that have been diagnosed typically have to choose between one of the two paths, which is a pharmaceutical solution, or that typically helps manage the symptoms of the disease, or the minimally invasive procedure called cardiac ablation. And out of those two, it's the cardiac ablation procedure that actually has a chance to cure the disease and restore the healthy heart rhythm.
So what are we actually talking? We're talking about a device, right? Essentially, right?
Exactly. It is essentially a computer system called the Pure EP that acquires and processes the signals that are delivered during the procedure. So the physician gets an opportunity to get a complete cardiac picture, basically, see the entire spectrum of electrical activity within the heart in real time. And it's critically important because actually the company was founded to address a widely recognized but an unmet clinical need in this field, electrophysiology, and that is the subsector of cardiology that treats irregular heart rhythms. Because what became very apparent, in the early days of BioSig is that even though the procedures were well understood, the outcomes were still suboptimal. And even today, Spencer, a typical success rate of the first-time ablation can be as low as 60%. In other words, one out of two patients typically comes back for a second procedure, which is far from ideal. And unfortunately, even in my own experience, I've met many patients that have 3, 4, sometimes even 5 procedures. So it is a critical need. And of course, one would say, well, there are many factors that that contribute to the success or the failure of procedure, which is correct. But there is a general consensus amongst the physician group that the quality of electrograms that are supplied during the procedure, and it's the electrograms that the physician is making his decisions or his or her decisions based upon, though that quality is often compromised, which means that the physician actually doesn't have a complete picture of the electrical heart. So that's what we're focusing on. We have a proprietary technology that has a novel hardware architecture, but also some of the novel solutions on the software side that allow us to deliver a signal that preserves the raw diagnostic data, that is not altered, and it's that data that holds a very critical value during the procedure.
So this is a device that could provide signals that could then determine what the course of action, right? Is that
that is absolutely correct, Spencer. Okay. So it's used in two ways, right? It's by means of diagnosing the condition during the procedure, which means that the physician can, read the electrogram and then help, it can help him locate the spots, in part of the tissue that are causing irregular heart rhythm. But also, that course of action can lead to the successful termination of disease.
So what exactly is this chart? Is this chart just showing us the total number of procedures that were a direct result of readings from your system?
That's absolutely correct, Spencer. Okay. So you can see in those are quarterly figures, and our procedural numbers right now stand at approximately 1,760 patient cases that have been conducted with our technology. We actually more than tripled the number of procedures done with our technology in the past 12 months. So this time last year, we were at approximately 425 cases. So we've raised our procedural targets twice this year, because our goal actually for 2021 was to complete 1,000 procedures. So this has been terrific, and there are a couple of factors that contributed to the rise in procedural numbers. First of all, and if you quickly go to the previous slide, if you don't mind, Spencer. So I just wanted to show you this is our installation map right now, and we're focusing on three strategic areas of interest here, which is the Northeast, Texas, and Florida. Those three are some of the largest areas that conduct arrhythmia treatments, and there are over 1,000 EP labs that contribute billions in electrophysiology charges. So they represent a very significant opportunity for us. So if you go back to the next slide. You can see that obviously the rise in procedural cases is a direct effect of our accelerated installation process, but also we've been growing our footprint in most of our installation sites, which means that typically a site would start with one system, and then they would request more units, which means that the number of sites may remain similar, but we've been going deeper into each of those sites and been engaging more physicians. And lastly, the post-pandemic recovery has helped us tremendously, because last year, most elective procedures have been put on hold. And as we started to return to hospitals, more physicians have become available, more patients have become more comfortable being in the clinical settings. So thankfully, more procedures have been conducted, which has been a very welcome sign of relief for both physicians and patients, because as we know, the focus over the past 18 months was pretty much on COVID, but there are many chronic conditions, including cardiovascular, that have been somewhat obscured by the pandemic, and it's important that the procedures are now being back on track.
So is the pure EP, is that like the most important thing for the BioSig story?
It is most important, absolutely. I mean, it is our first product. So we're still a very small and young company. We've been around for 13 years, and it is our first product. But it really is the reflection of our core competency in acquiring and processing cardiac signals that are more precise than what has been currently available, and that represents a significant learning opportunity for the field, because as we deliver more information, more intelligence, better procedures, better procedural decisions can be made. And if you go to slide 7, actually, Spencer, I just wanted to show what a typical installation looks like.
Yeah, sure. Not that one.
Thank you. Yes, so that's the one. I think it is important to see just how complex the setup really is. You can see that the system goes into 2 rooms. So during the procedure, we operate out of 2 facilities there. And if you look at the right-hand side, you can see Dr. Andrea Natali, who is globally recognized for his contributions to arrhythmia field. And our unit, the Pure EP system, which is the black box that is just below the patient table, and that unit acquires the signals that are then being displayed onto the multi-display screen that the physician is looking at. Then at the same time, on the left-hand side, you can see the second part of the system that operates out of the control room. And so you can see where the orange arrow is pointing. That's the 2 monitors stacked on top of one another. That's the Pure EP screens. So, and the representative or the lab manager that operates the system from that room is in a constant communication with the physician as they read the signals, and they help physicians, pay attention to some of the important areas. So as you can see here, Spencer, there's a lot going on here. There's a lot of equipment that is being deployed at the same time. So on the left-hand side of our system here, you can see a mapping system called Karr by Johnson & Johnson, and on the right side is a recording system by GE. So which means that, there's a lot of equipment that is deployed at the same time and operates on similar level of frequency. And so what happens as a result of that, very similar to how all of us experience the loss of mobile or cell signal or Wi-Fi when we are in the crowded areas, for instance, at the airport. So because all of that equipment is operating at the same time, it can be a very noisy environment. So our core focus is on cleaning up the signals that are being acquired by the physician and by other technologies. So we work in sync with all of the other systems in the lab. And our goal is to deliver a cardiac picture that is free from those artifacts.
I want to go back to this previous slide. Nope, that one. Do you have plans to expand to more hospitals or more regions?
Absolutely. This is really one of our core focuses for 2022. So we are now in the phase that is called the targeted commercial launch. And so we're growing our presence in those 3 strategic regions. But you will see us going much deeper in all of those areas, but perhaps also entering new territories. So, and really our focus is on the high volume procedural sites across the country. And the need is definitely there. But we also want to, as we started working with some of the leading centers of excellence, teaching facilities, but we also looking at the needs of smaller hospitals that oftentimes see very complex cases. So this is our really focus, to bring our technology to more centers and empower physicians, with better tools, with better information to deliver better outcomes.
I'm just curious, Natasha, what is like a typical, maybe you don't know this, but like what is like the typical sales cycle for one of these things? I mean, it's good that you showed this chart or this slide, because I didn't realize how complicated this was. I thought it was a much smaller device. So like I would imagine like equipment like this, it's complicated and it takes time to learn.
Right.
You have to have a tech, operate it as well. And I would imagine it's not as easy for a hospital to ingest as something that goes on your finger, right? Obviously, so.
Right. No, it's a good point, Spencer. Well, it is a capital equipment, so the sales cycles can be longer, especially now in the current environments. The hospitals, often hospitals are a little bit constrained, but the business model really for capital equipment, in particular, the capital equipment that we represent, is well understood by the administration. So there is a lot of value, and really the decisions are being made based on how valuable the technology is to a physician and to the hospital, and all of that other equipment in the lab is following a similar path. So and we really see our opportunity there is when it comes to a sales cycle, we're looking at the capital equipment sale, but we also have that very significant software opportunity, and that's where the most novel components that will be driving a physician experience they are on the software side. So we even this year we already delivered a couple of significant software enhancements. We delivered up to 90 novel software features that are all driven based on physician insight. So we feel that the hospital administration understands the value very well. So they definitely want to drive procedural numbers. They want to be able to conduct shorter procedures. They want to see more patients. So the need is definitely there.
I just want to clarify something you said earlier. Did you say that hospitals are back to their pre-COVID level of cardiology operations or cardiological procedures?
Pretty much, Spencer. Yeah. So the bounce back was very good. It started in the first half of this year, and we're pretty much back to 2019 levels. Of course, it depends state by state. Some numbers would vary, but the centers that we currently installed in, they're all very busy. They operate multiple facilities, and their patient flows are very healthy. So pretty much back to pre-pandemic levels.
Nice. All right. So what is the next catalyst here? Because you talked about being in the commercial expansion phase.
Right.
What is the next catalyst here that we can have to look forward to?
So we have a couple of catalysts there, and I did talk about the commercial expansion. I would just want to briefly go back to slide 5, if you don't mind, Spencer.
Sure.
So generating clinical data and clinical evidence is one of our core catalysts for next year. So slide 5, that's right.
This one.
Yeah.
Okay.
No, sorry, one more.
That one.
Yeah, 5. There you go. So one of the catalysts for in 2021 was was delivering of meaningful results from our first clinical trial. It was a multi-center trial that we've done across Mayo Clinic, Texas Cardiac Arrhythmia Institute, and Mass General, and we've demonstrated that the signals delivered with our technology resulted in over 75% improvement in overall signal clarity, and in over 83% improvement in the level of confidence with which physician was able to make procedural decisions. So this is a really strong foundational trial, and we really couldn't be happier with the result, because that set the tone for the future clinical work. So our clinical work shifts gears, and you will see a more targeted focused studies coming out next year and beyond, and we will start focusing on delivering more publications that are perhaps looking at the specific arrhythmia types. So we're moving one step higher from that foundation that we laid, and obviously in a peer-reviewed publication. So this is one of the catalysts that will be coming up. Also, I have mentioned. Actually, do you know what? Just before I move on, if you go to the next slide 6, I just want to very quickly show the viewers, because I talk a lot about signal clarity, right? But I wanted to show what that actually looks like, because you don't need to be a physician to appreciate the difference. So on this screen, you can see the capture from our system and the conventional system that was deployed at the same time. And on the left-hand side, you can see a circle that highlights a very small but a very important signal called the late potential. And on the right-hand side, this is a real-time capture that from the system that was deployed in parallel. That whole diagnostic value was not captured. So you really don't need to be physician to see the difference here. So that's really where our core focus is on delivering better intelligence, and that will translate into more clinical work and also some of the novel R&D opportunities. Some of the viewers will be familiar that we initiated 2 strategic initiatives on artificial intelligence this year, one with our long-standing partner and collaborator Mayo Clinic, but we also started working with the Technion Institute of Technology based out of Israel, and we're now looking at gathering the data that we collected with our technology and processing that by means of developing novel AI and machine learning powered solutions that will be targeting specific arrhythmia types. So we want to give physicians more tools and more information that to make them more efficient in the lab. So this is a really one of the cornerstones, I would say, in our strategy. You will definitely see us advance this work next year. We look forward to reporting on the results. And yes, expanding on our commercial installation base, because we gathered a tremendous amount of intelligence over the past 18 months. And our goal right now is to enhance our commercial strategy and accelerate product adoption.
Natasha Drapeau is the Vice President of BioSig Technologies. Natasha, thank you so much for coming on All Access today. I appreciate it.
Spencer, thank you very much.
All right. Hey, I want to encourage everyone. I see Mitch in the chat. If you have a question, don't be shy. I don't care how stupid your question is. There is no such thing as a dumb. Well, actually, there is such thing as a dumb question, but you can ask it anyway. We won't make fun of you. And I will ask it. I have no problem. I have no qualms asking whatever you want me to ask the people on our show. So we're going to pivot again. We started off with in the metals. We went to biotech. Now we're going to, what would you call this? Direct to consumer. You could call it spirits play. It's a direct to consumer, a DTC play. You could, I think that's probably how I would categorize it. We're talking to Winc. We're talking to Geoff McFarlane, who's the CEO, and Brian Smith, who's the president. They're also both the co-founders of Winc. We're talking wine. Let's bring Brian and Geoff on the show. There's Geoff. There's Brian. What's up, guys? How are we doing today?
Great. How are you?
Great to be speaking with you.
All right. This is a very interesting story. I mentioned you guys are both the co-founders of the company. Walk me through that. What was it? It was 7, 8, 9 years ago, somewhere in that in that range. Walk me through what, and I guess Brian, we'll start with you. What was going on in your life, and why'd you start this company?
Yeah, I was lucky to find a passion in wine. I didn't come from a winemaking background or even a wine consuming family, but became enamored with it through taking a job in a wine shop. And ultimately that took me on a path of pursuing becoming a master sommelier. So true passion for me. Also have been in the winemaking side, started my own brand, and was sort of a one-man show going around the country and putting wine in people's glasses and telling my story. And when Geoff and I connected, we felt like there was a real opportunity to take that concept, that sort of moment where you get that context that makes the wine taste better, and expand that digitally. And so when we first met, I was fascinated by that opportunity. And of course, Geoff had similar experience in hospitality. And that's how we started Winc. It was really to share those moments and leverage digital to reach new consumers. Now, our business has evolved quite a bit since then. We're really focused on leveraging an omni-channel platform that's both production, direct consumer, as well as wholesale to really scale a next generation portfolio of brands.
So, Geoff, Brian just mentioned your background in hospitality. So what was going on in your life when you guys partnered up?
Yeah, I my career's taken some twists and turns a little bit like Brian, but I've always had a passion for creating experiences for people. I grew up with a family that we always had friends and people in the house. My dad and I would cook together, and I just fell in love with people coming together and sharing those special moments. And so, I started in hospitality and in restaurants and bars, and got to know the alcohol industry a little bit through working with distributors, through meeting with lots of sales reps selling products to us. And I started to become passionate about learning more about wine. And for me, when I wanted to learn more about it, the industry was really tough to connect with. And so, even being in the industry, it was more challenging to find resources to learn about. And so, people outside the industry was even harder, and especially for, I think, the next generation of consumer that was connecting with products in a very different way. And so that's really how we came about thinking about Winc and starting to connect products to consumers first online, but then using that momentum that we could gain online to pull it into the wholesale channel, as Brian mentioned. And that's how we've created this omni-channel brand building machine.
Okay, so that's a good entry into like the general business idea, right? Online first, and then as you mentioned, omnichannel from there. But I guess what was it like at the time? Because I'm thinking about 2011, 2012. E-commerce was very established, but I don't know how established the idea of going direct to consumer in wine was. In fact, going direct to consumer itself was definitely not as widely accepted in practice as it is today. So, what were those initial days, weeks, months, even years like? As far as I know, are the only direct to consumer wine company.
Yeah, there was a few others,
Okay.
but we were certainly, I think we were really ahead of using it to be a brand building platform. And they're certainly like digitally native, vertically integrated, as it's being called today, was a very different world at that time. It was a lot more about building, platforms and more like retail versions of stores. It was the time of like Gilt and Fab.com and some businesses that many people might not remember that really used a lot of either the deal sites, heavy discounts to grow, and you had to build your own technology. I mean, Shopify didn't exist. Spinning up a store was a lot harder, and so there was a lot more investment in building out the technology platform. But it allowed us also to really get out ahead of the market and acquire a lot of customers when it was less expensive and really learn what our unit economics would look like ahead of I think a lot of the industry today.
I can tell you from a product perspective, we went from cobbling together a pallet, which is 56 cases of sort of different wines, to becoming a full-fledged producer. That was a big transition that we've taken over the past many years. So I remember kind of scrapping to build a pallet back in the day. Now we're one of the fastest growing wineries in the US, and we've got an incredible brand in Summerwater that was top 100 on Wine Enthusiast. So from a product perspective, we've come an incredibly long way, and it's kind of fun to think about how far we've actually come.
Yeah, I actually want to bring up a chart of your brands here, but Brian, it's easy to say, oh yeah, we've come a long way, but like, how do you build a wine brand from scratch?
Well, I mean, it's a great question. The traditional way is, you have a vineyard site and you make wine, and then you try and go out and find the consumers. I think what we believe is the modern path is you connect digitally first. And you solve a lot by connecting digitally first. You solve a lot of challenges for the traditional winery. One is trial, right? So you want to get people trying it. And if you remember that analogy of me putting wine in people's glasses to turn them on to my one-man show, we're able to do that at scale in a digital perspective. And we're also able to get incredible feedback, real-time feedback from these very desirable customers. 76% of our customers are in that enviable younger cohort of millennial and Gen X. And so we've got a unique model to build where we can test and iterate and innovate online, take those data and insights, and help inform how we optimize products for scale across channels.
So give us the kind of rundown on like the state of the business right now, because I'm seeing from the chart, obviously you mentioned omnichannel, so you're kind of everywhere. You're digital, you're in stores. What is the breakdown there?
Yeah, so we're the wholesale channel has been growing incredibly quickly for us, and the direct to consumer channel, as Brian mentioned, is providing a great way for us to launch new products and then create digital marketing behind it. So we're seeing faster growth in the wholesale channel. It's a larger part of the market. Over 90% of alcohol is still sold through that wholesale channel. And even as there's a fast adoption of e-commerce, a lot of that e-commerce is occurring in the wholesale channel because you can get your products on demand. So we really use the direct consumer channel, which is about 70% of our business today, as that innovation channel, as well as the digital marketing channel. In addition to that, we do get very good payback on the customers we acquire online. But we really see the long-term scaling opportunity in the wholesale channel. It's just such a bigger market.
So your online is, I guess, kind of the top of the funnel there, right? And then
I'd say it's the top of the funnel. What it allows us to do is really be competitive in the wholesale channel. It's the differentiator for our business against the larger, older wine and spirits companies that are slow to innovate and slower to connect with the next generation of consumer. It really provides us with the advantage in the wholesale channel.
Yeah, I'm trying to think. I guess it would be easier to go from direct to consumer to wholesale, and say for someone that can be an end consumer to say, oh, hey, yeah, I've had their wine. I see it. I'm going to go buy it in the store, as opposed to like, here's a wine that I've seen in the store. I'm going to go out of my way to buy it online. I don't know. Maybe I'm not looking at that right, but it seems like it'd be easier to have the direct consumer as sort of the top of your funnel. And so props to that. So can you speak a little bit more about Summer Water? Because as that chart showed, it is your biggest brand. Is that what's at the crux of your story here? Is the growth of that brand?
Brian, you want to take that?
Yeah, so certainly we're very excited about this brand. It's the first brand that we launched through our internal innovation process, starting in DTC and then finding significant scale in wholesale. It's a valuable brand in its own right. What we like about it is we're seeing high sales per door at a sizable, but still relatively small given the size of the market, set of doors. And it's a highly rated wine with high velocity. And so as we continue, Geoff mentioned wholesale is now 30% of our business. It's growing quite rapidly. It grew at over 100% or 100% in Q3 versus last year. Summer Water is really leading the charge. So it's our lead brand. It'll be our first to break through 100,000 case mark. But really, it's an indicator of what we can do with brands that we develop online and then scale in the wholesale channel. So we have more brands in our portfolio behind this that are continuing to scale, as well as some really exciting innovation projects that are in the pipeline that have yet to hit the market.
I'm curious, Geoff, what is your churn like, especially in the last year and a half or 2 years or so?
Yeah, actually, so the interesting thing is we've actually seen we've seen higher retention over the last year and a half, continual improvements, in that area. The only sort of change that we've seen that is really in 2020. There was just such a large cohort that quickly moved online. And so we haven't added as many customers in 2021 as we did in 2020, which, generally makes sense. But we've seen higher retention of the customers that we acquired in 2020 and higher retention of the customers we're acquiring in 2021. In addition to that, if you take a look at 2021, we're acquiring customers at double the rate that we acquired customers in 2019. So we're seeing the market move forward, but there was certainly a wave of customers as liquor stores were shut down, as people were staying home a lot more. That once things opened back up, there were certainly some of those customers that returned to shopping, but not not in fact at a lower rate than what we had seen historically. So we believe that 2020 certainly moved e-commerce forward significantly, but it was a difficult comp year from the direct to consumer channel for us, but that really just means we have lots more opportunity for growth next year.
Yeah, it's interesting because you're one of the companies that just sort of accidentally found themselves in a position to potentially benefit from the lockdown and all that stuff. And obviously you didn't know that, but that's kind of how it worked out.
That's right. But what's interesting about that is we've had this omni-channel vision, and it really harmed wholesale that year. And so we didn't see nearly as much growth in the wholesale channel as we would have seen otherwise. And so, I think we're getting back to a more balanced approach this year, and we'll see that continue in years forward as and I think that's the beauty of our business is we can take advantage of both channels for growth and really put our invested dollars into the areas that we see the most opportunity to grow and provide good return on invested capital, depending on which channel makes the most sense at any given time.
I'm curious, Winc obviously you guys recently IPO'd. Throughout that IPO process, what was like the biggest question that you guys kept getting asked over and over again, whether it's in the media or whether it's from investors? Like, what was the biggest question?
I mean, I think it takes I mean, it's a new and interesting model in that we're using the digital channel, as we've talked about, to really be an innovation channel. So we always have new brands that can grow behind, as you mentioned, Summer Water's the furthest ahead. It's paving the way for our other brands. But it really was, digging deeper into that model. And I think the other question that Brian got quite often was, how do you produce wine consistently year over year?
That's a good question, Brian.
I'd say that the proof is in the pudding. Certainly with Summer Water, we've scaled that quite quickly. But we have by being customer first, we really have sort of reverse engineered the wine industry, and we operate in an asset light model. We source globally. We have an incredible winemaking team that delivers high quality products at scale. But that gives us, the full benefit of a global supply of raw material, as well as, capacity in facilities where we're making the wines. Also allows us to focus on building brands and focusing on the customer. So we're extremely agile when compared to a traditional winery to take advantage of quality trends, macroeconomic trends, et cetera. And we can be extremely dynamic and fast in terms of innovation. So what's behind it in terms of production is actually a really exciting part of our business that also gives us an advantage in terms of speed, agility, and also, as you've seen with Summer Water and other wines, delivering quality.
Geoff, I'm going to assume that most of the people watching right now are like me in that they have not invested in wine previously. Can you speak a little bit to just like the historical performance, or just like wine as an investment, wine as an asset? How does wine, how is it priced historically? How does the price appreciate over time compared to like other spirits, or even consumer packaged goods, or even other food and beverage, right? I mean, like, can you just speak to the wine market and just the growth of that market?
Yeah, absolutely. I think the interesting thing about the market today is that the overall, as Brian mentioned, production and supply chain in the United States has come so far over the last 40 years, and the industry was really built with the baby boomers who adopted wine, massively, and have created an over $70 billion industry in the U.S. What's really unique about the time that we're in today is, as Brian mentioned, 76% of our customers are under the age of 44, and between the last few years and predicted over the next 7 or 8 years, the baby boomers are beginning to drink less and less, and millennials, Gen X, and Gen Y are adopting new products and drinking in a very different way. And so I think what's interesting about the investment opportunity in Winc is our ability to connect with that generation, innovate on products that we know those customers love, and then scale them on our national wholesale channel. And I think what's different about the wine market today versus, say 20 or 30 years ago is there was so much infrastructure being built in the United States. Europe has been building their wine infrastructure, production, and vineyards over the last couple hundred years. That really started in the 70s and 80s for the United States. And so there were some wine companies that came public in that time period that were heavy asset based, but the infrastructure that's been built in the US as far as the amount of vineyards and the amount of wineries allows companies like us to be so much more efficient today than they were historically. And I think you're starting to see other wine companies come public based on the ability to be more asset efficient than they were capable of being a long time ago.
Okay, a couple of questions from our chat. Quick, Herd Scrambler, I see you. He says, "See that holiday special? How do you make any money with that free shipping?"
As I mentioned earlier in the show, we've been doing this for over 10 years. So we have deep data on our customer economics and how customers, their lifetime revenue performs over time. We also have the benefit of scale at this point. So we've really worked hard on we own our own fulfillment centers. We've worked very closely with FedEx to get to rates that work for them, but are also profitable for us. And so we offer a great first time offer for customers signing up, but we have as I mentioned earlier, it shows, such good retention rates that it allows us to really invest in customers, trialing for the first time. And then, they come back often and we make great products. And so they come back and shop our products after that.
And there's a few questions about the quality of the wine on the scale. I guess, Brian, I'll read Anthony here. We talking Yellowtail? We talking $2 Chuck? Or I guess $3 Chuck now? Or we're talking, some higher end?
Yeah, those are two good bookmarks. I'd say we're in between.
Okay.
Where we really feel like we can find success with products is in the sort of premium price point, which is in that $15 to $23 price point. That's actually where the majority of wine is sold in the United States. Also, it's an area where we think we can our winemaking team can deliver quality, so we can get distinction and quality at that price point. So I would say we're a premium product. Dominus is a great wine. We're a lot less expensive than that, but would be happy to do some blind tastings at some point to see if we can beat them.
And it would be stupid to have a master sommelier on the show and not ask him for like the wine trend of the year, your favorite wine or type of wine right now.
I think much like our customers, I'm an explorer, and so I'm constantly tasting new wines. I think orange wine is probably one of the biggest trends, as well as organic. We've made a significant investment into organics. That's based on not only my own preference for sustainability and regenerative farming practices on a global basis, but delivering great quality. And so we actually have a rapidly scaling portfolio of organic wines, and this is a huge trend. It's probably the biggest trend in wine, projected to grow at an 11.5% CAGR over the next 4 years, and it's been identified as the leading opportunity for younger consumers. So that's an area where I'm personally passionate about it, but others are as well.
All right, last one real quick. Miss Whitehorse, do you have any fruity, sparkling, or dessert wines, is what she says.
We do, yes. We have a Moscato currently. And then it's an organic Moscato called Pizzolato. And then we're constantly testing new products. So you'll see some sweet wines come through the pipeline as well.
I don't care what it says about me. I love Moscato. Okay, sue me.
You're not alone.
All right. Brian Smith, Geoff McFarlane, the president and CEO respectively, and also co-founders of Winc. Guys, a pleasure to chat as always. Good luck, and thank you for coming on All Access today.
Thank you very much.
Thanks for having us.
All right. We're going to move this right along. How are we doing on the likes front? I should keep an eye on the likes. Where are we at? Let's take a quick look before I bring on my next guest here. Whoa, heard that. There we go. We're at 95. Okay, let's get to 100 likes before our next guest. I'm going to bring him on like right now. We are... Okay, we're there. Thank you very much, everyone. See, that was fun. Okay, let's bring on Gerald Commissiong. He's the CEO of Todos Medical. Guys, we got to pivot away from, the wine was fun, but this next one is a lot more serious, right? We're talking a company that is operating in the nexus of COVID and the pandemic and testing. So let's ask Gerald all about that. Gerald Commissiong, CEO of Todos Medical. Gerald, how are we doing today?
Doing great. How are you?
Doing fantastic. Was my tease accurate? Is that a fair assessment? You're sort of operating at the nexus of this pandemic?
Absolutely. I'd say
Okay.
test, and then treat.
Okay, so tell us about Todos, what you've got, what you're working on, and then I have many, many questions.
Yeah, sure. So in the pandemic, the main thing now that people would be focused on is our oral antiviral that we're calling Tolovir. It's got the exact same mechanism of action as the Pfizer compound, Paxlovid, that just confirmed data in terms of their clinical readout in preventing hospitalization and death, except our Tolovir also has an additional mechanism of anti-cytokine so that it can help not only in the outpatient setting, but also in the hospital setting, so treating severe and critical. We have a phase 2 clinical trial that we are now preparing to read out on later this month in hospitalized patients. Endpoints will include death. Endpoints will include reduction of time in the hospital. They'll also include some biomarkers related to disease severity. So really, we're looking to see if we can really solve the COVID problem, make it a lot less scary, and take death off the table.
All right. So there's a lot of information there. I guess we'll start with this. How does all of that stand now that we've got several variants out there? We've got, Delta, we of course have Omicron. How does the variants, how does that put a spin on what you're working on? Because we just had the news this morning out of Pfizer that their oral treatment is pretty effective at reducing hospitalization. So how does the variant sort of affect that?
Well, look, for us, the wonderful thing for us is, just like Pfizer confirmed, it looks like our mechanism is variant independent. So it holds up against Delta, holds up against Omicron. That's important. What is, when you look at the data and what they've presented recently, they showed a reduction of hospitalization and death. That wasn't really against Omicron. They also showed a little bit more data that showed that their drug is still effective against Omicron, but a little bit less effective. And so what that means in the real world is it's wonderful that that 3-cell protease inhibitor is going to be in the market, but a higher percentage of those people will escape past that potential to get into the hospital and will need to be treated. So, unfortunately, that is the case. But, the good thing is we are developing a product that will also do what they do, as well as help with what's driving the hospitalization, hopefully get them out of the hospital sooner. The other thing that's critical when you look at that is ours is an all-natural formulation, whereas theirs also has an HIV drug that you have to take alongside their Paxlovid in order to keep it in the system for longer. So for us, we don't have that issue as it relates to potential drug-drug interaction. So it's wonderful to see their data, but doesn't mean that there's not a very, very, very important place for Tolovit.
And so the data this morning was a phase 2 and phase 3 study results. Where are you? Where was Todos in that trial regulatory process?
So we're in a phase 2 trial in hospitalized patients right now. So that's exactly where we are.
Okay.
We are preparing to read out on it. On the interim data, I expect that there's not going to be a next phase of the trial. They're going to stop it, and we're going to move towards a pivotal. And then the question is going to be, how desperate is the situation in each country, whether they need the drug now or whether they feel they can wait if hospitalizations are going up, as we're starting to see in South Africa, as we're starting to hear in Europe, and as we're starting to see here in the US. If the situation is desperate enough, this is a very, very safe product. It's a natural product. A version of this has been used by thousands of people at this point, and with no, significant side effects at all associated with it. So we think that, there's going to be some jurisdictions where we can get an EUA based on this data. We think that there will be other jurisdictions we'll get based on an interim phase 3 data, and then there'll be some that we'll get after the full phase 3. It's all just going to depend on what the need is. But the most important thing is that this is very safe. So the downside of using this product is extremely limited.
I'm going to presume what we're really talking about here is people who are not vaccinated, right? Because those are the ones that would theoretically have the more severe cases and would need treatment and would need your drug.
Well, for us, it doesn't matter. Our trial included both vaccinated and unvaccinated.
It did. And was there a difference there?
Well, we'll see. So I can't comment on that yet. We got to wait until the readout. But
Fair.
The mechanism, you heard Fauci talk about the Pfizer drug and say, yes, the trial was only in the unvaccinated, but we expect it to work in the vaccinated because of the mechanism. There's no reason to believe it's not going to work in both. And the reality is with Omicron is there's going to be a lot more vaccinated people end up in the hospital. It's just the reality because of breakthrough infections. They're going higher, and they're only going to continue to go higher. The booster will help, but it's going to be short-lived. And so you're going to be in a situation, especially if you're not tested for your neutralizing antibodies, where a lot of people don't know that they don't have the optimal protection, as Fauci called it, of the boost. You don't know how long that boost lasts. And we're only going to find out in real time once a lot of people get infected. So the reality is people are going to get infected. You want to treat them. Many of those people, because of testing delays, they won't get their result. With the Pfizer, drug, it's all going to be by prescription only, of course. It's not an OTC product. As a result of that, you got to wait till you get your result. If the turnaround time for your test is 2, 3, 4 days, as we're starting to see turnaround times go up, you may miss the window in which you can be prescribed that drug. And so that's a big problem that we have to address. Testing is going to make it harder. And that's why, the window that our drug can treat is much larger. And that's why we think it's important.
And I apologize if you already said this, but it's important and I don't want to miss it. As far as timeline, when is the timeline for, the end of the data readout on the phase 2 or anything like that?
Phase 2 data we expect will be done this year. So we're, feverishly working.
Okay.
The trial has been paused. We brought on a special advisor to really make sure all the data is buttoned up and prepared for submission to the FDA when we go in for our pre-IND and IND meetings. We've already engaged an advisor in Europe who's helping us in Germany. We have a partner in Greece who's helping us in Greece. And of course, we are already in Israel and in discussions with the groups there, and have some very key people, on our side, because it's been used in quite a bit in Israel, and people have confidence in the data, and most importantly, confidence in Dr. Reaugh, given the background she has in developing 3CL protease biology and inhibitors. So we've been putting together slowly, carefully, all the pieces as other players have fallen off. Obviously, our prospects have grown. We thought the biology of 3CL protease was the right target, last year, and we're lucky to be proven right in the clinic by Pfizer. And we think our observational data shows that we can have an impact in the hospital, and we think that we'll confirm it, with this control data. And then we really think sky's the limit. Next thing is really making sure we can manufacture the quantity. And there, we've done a lot of work because we have a different product, which is a OTC product. There are no claims for it. It's not, I can't say that it diagnoses, treats, prevents, or cures SARS-CoV-2 or COVID in any way, but we have a supplement 3CL protease inhibitor version called Tolovid on the market. And so, we've learned a lot with that. And we think that now that we really understand the dosing, the Tolovid program is really set to shine. So
we're going to keep going on this, but before I forget, I just want to clarify: is Tolovid, is that the main story here? Are there other things in the pipeline, or is that it? Because we're going to spend the rest of the time on Tolovid, so I want to make sure we're not missing what other things you have in the pipeline.
Yeah, no, I mean, we have a huge pipeline. So beyond Tolovid, obviously, I mentioned we have Tolovid, the dietary supplement version. We have Tolovid Daily, which is a 3CL protease inhibitor you can just have in your system on a daily basis. We think we have some data shows that makes sense, that it really does support your immune system. And on the immune aspects, and we'll talk about that, when that data is published. The Tolovid product, obviously, we think it's something that you just want to have in your medicine cabinet if you want that maximum 3CL protease protection for whatever reason. And then we have really our diagnostics pipeline. Which, there we have on the 3CL protease side, we think we've developed a mass technology that can screen rapidly large quantities of people for COVID around 3CL protease. And you can identify people earlier than PCR. And that will actually help the oral antivirals be successful because you'll find people early and intervene early. And then that's one project that's going to be big. We're going to be working on in the 3CL Sciences sub that includes Tolovid and Tolovid, and now Tolotest. And then we have our proprietary cancer diagnostics and Alzheimer's diagnostics. We have the Videssa breast cancer test. We already have well over 1,000 prospectively collected samples. We showed over 92% sensitivity and over 98% negative predictive value with that test. Our chief scientist, Dr. Jorge Leon, is preparing for a 750 patient clinical trial in Mexico that we expect to launch very soon to revalidate. And then we'll be launching that test in the US towards the end of 2022, and then a full real launch with reimbursement in early 2023. So that's a very big story. Obviously, we have a blood test for Alzheimer's disease. We have data that's going to read out in the first half of next year. That trial started actually in 2016. So it's a 5-year study that really, will drive home the value of early detection and how that early detection correlates with other aspects of disease, so we can find it early. And then, we have our COVID testing. And with COVID testing, we're ramping up dramatically In fact, we've got to hire extensively. We're ramping up dramatically our testing at the lab now with new contracts from some of our existing clients and expanding contracts from other clients. And then the CPAS neutralizing antibody test. And that really, when you hear Fauci and others talk about the booster, really everything is about neutralizing antibodies. Every single decision that is being made is about neutralizing antibodies. Whether or not you have protection against Omicron is all about neutralizing antibodies. So knowing your neutralizing antibody status, if you're going to be boosting, is critical to figure out when you're going to have to boost again. In Israel, they're talking about a fourth shot. Fauci just talked about a fourth shot a couple of days ago. So we know that fourth shot is coming if you want that optimal protection. You need to know your titers. You need to know when they go down so that you can protect yourself. So those are the other stories. And so it's a revenue story because we're generating significant revenue in that lab.
There's a good question that I was actually going to ask anyway from Brian McCann in the chat. Why haven't we heard more about Tolovir?
We're small. Todos is a small company. Tolovir is a natural product. Obviously, the entire pharma industry has largely tried to go away from natural products. We see, CBD and other industries starting to grow, and they're having their own challenges in terms of differentiating because they're all the same, with those products. So, natural products, typically have gotten kind of the short end of the stick, but they're, I think, making a big comeback. We see that CBD, obviously, we see the psychedelic industry. There's a lot of natural products there. So investors are interested in it, and the market needs natural products to come back. So I think that's one reason. And we're a penny stock. We're a penny stock, and we're on the OTC. And generally, there's a lot of skepticism, but we don't intend, to remain here for long. We're preparing to get up on NASDAQ after we get our trial data readout, and we really get ready to launch our product and expand the launch of our Tolovir product. Based on the tremendous increase in interest of 3CL protease inhibitors, given what's going on out there.
So obviously, we've established that you can't speak to the phase 2 data that you haven't released yet. But speaking of the earlier data, what can you say about the risk profile of Tolovir?
So when we talk about the observational data, again, so it's a similar sized data set. We saw a 100% reduction in death. We saw a 25% reduction in time in the hospital, which obviously would be longer if people on the control arm didn't pass. We saw a dramatic improvement in biomarkers, specifically CRP. And so, we saw pretty much everything that you would want to see. Nobody died. People got better faster. They felt better, and they got out of the hospital. So that's what you want in a treatment for COVID in the hospital. Obviously, the next stages is really confirming, and that's what we're doing now, the dosing, confirming the extent of the difference in a placebo-controlled trial in the biomarkers, and looking at new biomarkers. So, some of these IgM, IgA, IgG, and our CPAS neutralizing antibody, we're going to be looking at all of those. We're also going to be looking at the interleukins, so interleukin 6, as well as several others, and other markers of disease severity, because it's becoming clearer and clearer if you have an impact on those biomarkers, it correlates really well with clinical outcomes. And so we think that could be very, very powerful, even if the small cohort of our study, if you have really strong biomarker response, that could be very convincing, given the safety profile.
Okay, so we have Tolovir phase 2 readout data coming, you said end of year. And then the next step there will be a phase 3 and onward, right?
Yes, correct.
Yeah.
So the next step would be we're
Pivotal
planning to have a pre-IND meeting with the FDA so we can get a US IND, because all of our stuff is done in Israel so far on Tolovir. And now we intend to go global. So, if you look on the clinical trial sites in the US, you won't find Tolovir, but you will find it on the Ministry of Health in Israel. We intend to be expanding globally. So we're already looking at sites, obviously in Greece, given we have a partnership there. We're looking in South Africa. So we have conversations ongoing, given the hospitalization rise there. Although there will be a lot of competition for patients. But in Europe, in the US, we think, obviously, we heard about the first Omicron death yesterday in the UK. And unfortunately, we don't think it's going to be the last. So we do think that, there's a lot of opportunity to expand our footprint. But most importantly, is just continuing to get the data and submit it to the authorities. We're going to continue to do that in a phase 2/3 and look at partnerships, because as we get more data, as we build out that next gen mechanism-based design next generation Tolovir, which will be a chemical pill, but really structured on the natural product. So we think it'll have a better safety profile. We think that it could become a very attractive play for pharma. So we have a lot in the pipeline.
Good question from K-Star. How much will Tolovir's success be based on Pfizer's success?
I think, initially quite a bit. When you talk to regulatory agencies, obviously drugs in the same class is very important. If you see side effects with a drug in the class, if you come in with a similar drug, they're going to ask about the side effects. That's a natural thing. So, the fact that Pfizer's coming out, we haven't heard anything about significant side effects. And even if they did potentially have significant side effects, that may be related to the HIV drug in their formulation, as opposed to the 3CL protease inhibitor, because 3CL is only in the nidovirus subcategory of coronaviruses. So we think that's going to give us a huge leg up when we have those conversations. And obviously the safety profile that we have, we're very excited about our prospects. So no, what's good for Pfizer is good for Todos. And we think that, we can help buttress any challenges that they have in terms of efficacy, because we can treat those patients who don't respond to the Paxlovid.
All right. There's a lot of questions. Yeah, guys, we're not getting to all these questions, just so we're clear. We can do like one or two more. Nick H asked how much root is available to make Tolovir.
We've been working on supply chain, and we're very confident we can manufacture the tens of millions of doses, which should be able to meet the demand for the hospital market. That's one of the reasons we went after the hospital market and not the general market, because Pfizer is going to have to manufacture hundreds of millions of pills, and they will carpet bomb the market, and that's for sure going to happen. But we know, because of the testing challenges worldwide, we know just because of the biology and some of the challenges with the variants, people are going to escape that frontline Pfizer therapy, and we'll be there. We'll be there to be able to help treat those patients. So we think we can definitely treat that hospitalized market, and then we're going to expand into kind of the people that either didn't get it and end up moderate, or the people who got it too late and end up moderate. That's the next one. And then importantly, pediatrics. No one's talking about kids, and obviously no one's going to give an HIV drug to kids. We think that that's an area where we can have a significant impact, because it is a natural product and does have such a strong safety profile. And finally, we think that there could be some effect in long COVID. We think there's some reasons to believe that could be the case. So we're going to evaluate how best to go after that, and maybe some subset of long COVID to target, and then look for other ways to help long COVID patients potentially down the line with other technologies that we have access to. So we think that the supply is not going to be a problem for the population we're going after.
All right, guys, where were all these questions like 10, 15 minutes ago? We're out of time. Gerald Commissiong is the CEO of Todos Medical. A lot of interesting debate going on in the chat. Gerald, good luck. Seriously, we're rooting for you, because if this is going to work, then it's good for humanity. So thanks for coming on All Access today, and I look forward to seeing the results of the phase 2.
Absolutely. Thank you very much.
All right. Let's keep this moving here. Man, chat is fired up. Yeah, I wish we could have gotten to more of those questions, but I do have to keep the train running on time here. That's one of the things they pay me for. We're running behind now, but let's try to keep it not running too far behind. So if you are in the chat and you dropped a question, I appreciate your participation. It did not go unnoticed. I unfortunately don't have time to ask Gerald 1,000 questions. If I did, we'd be here all day, and we wouldn't have time for anything else. But let's move on here. My next speaker is here. I see him backstage. Larry Reaugh is the president and CEO of American Manganese. We're talking lithium. Did you guys catch that story yesterday in the WSJ about the global shortage of lithium? Makes you think. Larry Reaugh, President and CEO of American Manganese, joining us now. Larry, how are we doing today?
Doing fantastic.
Thanks for coming on All Access today. I appreciate it. First, I always like to start with the background. Tell us yours. What is your background, and how'd you end up here?
Well, my background is in mining, but I've been involved in technology for quite a few years. And it was the mining aspect of it that led us down the path that we're on now. And that was when we developed a process for low grades of manganese in the US, which is the only sort of deposits that they have. We found that that was adaptable to recycling lithium-ion batteries.
Okay, so tell us about American Manganese, and we're talking lithium, but explain to us, the actual business here. Is it just a pure mining play?
No, it's a technology play, but it's rooted in mining, and by that I mean it's this type of we went after the metallurgical process. And rather than the black mass or anything like that, is well covered now. It's the metallurgical process that you have at the end of the day, where you can actually, reuse the water. Nothing goes back into the environment, and so it's environmentally friendly, and it gets close to 100% recoveries and purities.
So what exactly is the difference between you and the other lithium miners out there?
Well, we're not competing with the lithium miners, although we do get close to 100% of the lithium back. But the difference between us is that we're very transparent about what they do. That transparency doesn't exist in other companies, so it's very difficult for me to draw a parallel. And it's all we do is we try to keep our shareholders involved in the company by transparency of what we're doing. And I honestly, there's nothing out there that would allow me to compare us to somebody else that's in the field.
Okay, so tell us a little bit then about Recyclico, right? Which is that's your process. You already kind of explained it a little bit, but as far as I understand it, is that's the key here. So how exactly does that work?
It works off the reagent that we use, which is very inexpensive, and it has the ability to recover 100% of the lithium ion and take it down to a high purity, which is greater than 99%. And that reagent is SO2, which is explained in our patents. We do hold several patents. In the US, we have, just on the manganese process alone, we have a patent and 5 others around the world where we feel that the need is there. And with the lithium ion, we've got several patents. Again, we've got 2 in the US, and we have now got 3 in the other jurisdictions like Japan, South Korea, India. And so we are moving ahead with that. The patents are important because they protect your process. And so they went through very rapidly. We've had peer reviews on them that is quite intensive. Peer review being just that they send it out to 4 or 5 different scientists who go through it separately, and they look at the novelty of it, and they also look at, in their opinion, whether this is a workable solution. And we went through those peer reviews, 2 of them. So we feel very confident in what we have, and now we're getting the demonstration plant, getting it ready to get up and running.
Can you speak a little bit, Larry, just about the lithium market right now? Obviously, the prices of lithium are rising dramatically. There seems to be a lot of it, but the mining and the conversion of it is where that's where the rub is, right? Is that fair to say?
I would agree with that statement. And the reality is that lithium is produced in brines in South America, and is produced in hard rock in different parts of the other parts of the world. So the leaders in that would be, I have to take my hat off to the Australians. They always seem to be out front on these things. And, I think that they're probably are going to help solve that problem rapidly. And, but also on our recycling, where we get 100% of the lithium back, and I don't know of anybody else that can do that. The recycling will alleviate some of the demand from mining.
There's a good question here on the chat. That's actually not that far off from where I was going with this. So Billy Bob is asking, with the global supply of lithium decreasing, how will this affect revenue going forward for smaller companies like American Manganese?
Well, American Manganese, of course, is in the overall space of recovering all of the cathode materials in a battery and producing a precursor. And the precursor fetches a better price. So that's a route that we're taking. We've done that. We've had tests, batch tests, where we've shown that we can do that. And now on a continuous basis with our testing, we hope to be able to show we can do it on a continuous basis. I have no doubt that that will happen. With a background in mining, we went different routes of actually pursuing the solution. And the solution is really, with that knowledge, the company was armed with, and with our contractors, Cometco, who have a reputation for being able to solve very difficult problems. We feel that the lithium situation is something that we can help alleviate, and it's a good price. We'd like to see that. So we're doing testing for some of the OEMs and some of the actual battery manufacturers and actually lithium producers. So they're all under NDA, unfortunately, so we can't mention their names.
Well, that was my next question, was who are you selling to?
Well, we'd be selling that into the market, but the whole idea is to tie up, like we have an MOU with Itavolt, which is a big gigafactory that's going into Italy, and they're designing our recycling plant into their plant. So being at the site, getting immediate supply of material, and then selling it back to the OEM. In this case, it would be Itavolt. Now, we haven't done a lot of like some of these companies with black mass. They have, they've made deals with some of the OEMs out there, and but we're not quite there. We want to have we'll know exactly what our cost is, recoveries, and impurities will look like at the end of the day, and what the product will look like. But being integrated into the lithium battery manufacturing is the best way to go as far as we're concerned.
So, Larry, as you mentioned, you've been in the industry for, I guess, basically your entire career. I think over 50 years. I'm just curious, aside from the technology, obviously, how is mining different today than it was, back then?
Well, it's not. There's a lot of innovation that's occurred. There's a lot of IP that has been introduced into the mining, but the basic tools that you use, like flotation, crushing, flotation, ball mills, all those sorts of things are still going strong today. And in our particular case, we don't have that. We take a pure product and turn it back into a pure product.
What is, we're always talking about catalysts here, Larry. What is the next thing, the next event we have to look forward to, or is it just a continuation of the mining process and to the continuation of the growth of the rise of the price of lithium is still going up.
The price of the metals certainly helps, any company that's involved in battery metals. So we look at it. We want to keep a close eye on the price. We're certainly happy with lithium. We're not happy with the fact that they've reduced the cobalt down so much. It used to be one of the main cheerleaders in the lineup of metals that are used in batteries. But we think that this is just to us as an urban mining. It's not going out into the boonies someplace and stripping off the overburden and then mining the material, whether it's underground or by open pit. This is just urban mining where we reduce it down to a workable solution. And we can work with scraps, which I like. We were the first ones to talk about scraps back 4 years ago. And now with black mass, we've done enough testing on black mass to see that we're in that ball field too.
Any thoughts or plans on an uplist anytime soon?
Well, we hope to have the demonstration plant up and running by early February. And that demonstration plant, who knows, we could be able to put more through it, which would make it almost a commercial plant on a very small scale. And it could actually produce revenue on a very small scale. So, and the next move is to move into the commercializing of the plant. We're looking at a 5 ton per day. That could change, but 5 tons per day would be a good commercial test, in which we would generate a lot of capital.
How long does it take for a plant like that to actually break even?
You mean with our plant?
Yeah.
I really believe that we could be within a few months of starting the commercial plant. We could be in a break even and actually into a revenue generating positive revenue generating plant. It's the material's valuable. It's somewhere between $17,000 and $20,000 a ton, and our costs, if we can keep those down, our cost for the reagent is about $1,000 a ton, and maybe $2,000 a ton. And then you got labor and electricity and all these costs that go along with it, but they're considered to be very small. And so we think we'd be in a positive cash flow position within a few weeks of starting up the commercial plant.
And then I guess what should the investing public understand about the lithium market, aside from the fact that the price of lithium is, as I said, I've now said several times, is keeps on going higher? I guess for someone who doesn't know about the space too much, what would you want to convey to them?
Well, I'd like to convey to them that we're an alternate source for lithium. And we get 100% of it back. I don't think any of our competitors are able to do that. And but 100%, that's kind of like a lithium mine in its own space. Seeing as we're talking about lithium, that's the hottest commodity out there. And so we want to ride that horse. And so lithium is very important to us, and we have a methodology and a metallurgical technique to get it back. And so we'll be a player in the lithium market. That's what I want them to understand, that we would be a player in the lithium market.
And just to be clear, lithium is the core of your business, but are there other metals involved, or is that what we're talking about? Well,
you have other metals. Excuse me. And lithium is actually the reactor that carries the particles back and forth and builds a charge, builds electrical charge. that runs the car. And so lithium is very important. And, it's not something to overlook. The other metals are, cobalt, nickel, manganese, and aluminum. That's pretty much the other metals that we look at.
All right, Larry Reaugh is the president and CEO of American Manganese. Larry, thank you so much for coming on All Access today.
Thank you.
All right, we're going to pivot again. The show is full of pivots. We are rolling along here. Let's see if we can move away from lithium metals mining. We'll move to blockchain, crypto, growth. Well, not that lithium isn't a growth industry, but a much newer industry, a much newer asset class, I guess, in a way. So I've got my next guest here, and I see him lurking backstage. Let's bring him on if we can. Sheldon Bennett, the CEO of DMG Blockchain. Sheldon, are you here? Yes, he is. How are we doing today?
Hey, yes, I'm back, Spencer. Good to see you again.
You're back. Good to see you. Since we last spoke, Sheldon, I saw a PR. You guys bought. Actually, tell us what the PR said, because you guys bought some more miners and some more.
Yeah. So since we last spoke, we've gone out and bought some more crypto miners, which is the base of our business, our core business. We bought another 1,800. Expensive little guys. They're all about $11,000 a piece, but they work quite well. But what's interesting about them is they're the new generation. So they're now the 5 nanometer miners out of Bitmain. Previously, they were selling 7 nanometer Bitcoin miners. Before that, you had 10, and before that, you had 16, and before that, you had 26. And so over time, the chips are getting more efficient, and the technology is getting better and better every time. These new miners use less power for the same amount of work. So it's a great investment in an asset that will have a long life and generate a lot of revenue for us for many years.
If you guys haven't seen Sheldon on our channel previously, or if you missed a previous show, I want to share a slide that I definitely told you this last time, Sheldon. Was one of my favorite slides I think that I've seen that explains the crypto space, and that is this guy.
Yes.
This, I'm a visual learner. This is a very, very good, in my view, visual interpretation of like the Bitcoin and blockchain universe and where different people lie. So as we've got here, DMG is sort of on both tracks, right? You're on the mining track, and that's where the revenue is coming from now. But it's not the only part of your company. So explain the other part of your company.
Yeah. So if you look at the iceberg, and the sort of the tip of the iceberg slide here, the idea is that the world of Bitcoin mining is around a $16 billion business. If you just look at the Bitcoin generated and transaction fees, and there's a bunch of companies that go after that money. We're one of them. There's some much bigger companies than us. There's just thousands of them. And that Bitcoin mining is all about a blockchain, the Bitcoin blockchain, that has a coin, which is Bitcoin. So it's a use of blockchain, we're just talking about one blockchain, which is Bitcoin, the largest, and that's the tip of the iceberg. But beneath it, there's lots of applications with Bitcoin that you can monetize. And so we're into the exchanges now, we're into wallets, we're into pools, all things where we can make more transactional fees off of Bitcoin. But also, underneath that tip is every other sort of crypto coin out there: Ethereum, Monero, Solana, you name it. So there's a huge business just in the blockchain ecosystem that DMG is involved in and is getting more involved in. And as you can kind of see, we parsed out 16 billion versus 2 trillion. Those are estimates that we found doing a bit of research. But when you look at the size of this, and I think it's growing every day, we want to position our company not to be just a pure crypto miner, in the minting of coins, but we also want to position our company and have the software that drives all the transactional side of those coins that are generated, through the ecosystem. So, our company can continually get revenue for more than just block rewards. And we're going to be positioned as a trusted partner in this new ecosystem.
Can you speak a little bit about, I guess, sort of how you would call that other part of your business? The non-mining part would be is it blockchain as a service? Is that like a
So we try to make it simple. We call it core and core plus. Our core business is Bitcoin mining, the top the top bit of the iceberg there. And anything beyond Bitcoin mining, which is our software business, is called Core Plus. Okay. And that's really all under the hood and the name of BlockSeer. And BlockSeer is a company that we bought out of Silicon Valley back in 2016. It was focused in on analytics and sort of all things related to hardcore data science with the Bitcoin blockchain. And we took that company, and they had a product called Explorer that you could follow transactions to the Bitcoin blockchain in a graphical way. So you could see the transactions, the wallet numbers, the amount of coins, the time, how much was moving around. And a very simple but very powerful product because it had a lot of clustering. So it was sort of a smart tool that if you had one wallet interacting with another wallet, it could tell if you were the same beneficial owner. And so it had a lot of great technology around it. It had a way of clustering. So if, one transaction happened at, say, a gaming site that we knew was like a gambling website, it would cluster all the other transactions and say, hey, these are all the wallets that are part of this gambling website. And it gave us a great amount of information about what's going on in the Bitcoin ecosystem. On top of that, we started putting labels on all of these. So you can, we can just write, this is a gambling website. This is whatever gambling website it is. We built that out. We built out some software around managing Bitcoin mining operations. Then we built out our first pool, which we white labeled and sold off, or I should say sold, but licensed to Marathon, which is the largest Bitcoin miner in the US. We've got a second pool with Argo called TerraPool, and it's all based on sustainable energy. So you need to have clean, sustainable energy to be on this pool. That one's launching soon. We've been betaing it for the last few weeks with our friends at Argo. And then now we're into the wallets where people can hold crypto with us. We're going to try and get a wallet out soon that you can actually have insurance on your crypto, which is hard to find. So if you have 3 or 4 Bitcoins just sitting around doing nothing, they may be a lot safer to have them with us, where you have insurance on them instead of taking the risk of losing your private keys or somebody hacking into your computer and stealing them or hacking into your phone. So we're really pushing on the safety and security and regulatory sides of crypto to bring crypto to a wider audience. We don't want it just for us lonely miners out there making Bitcoin. We want it for everybody to take on the advantages of having Bitcoin and having a stable asset. Well, having a very volatile asset, but a growing asset. Right. I think it'll become more stable over time.
Sheldon, one of the biggest criticisms of crypto from the traditional finance, aka the TradFis out there, is fees, right? Bitcoin, crypto, the fees, the costs are very, very high. There's of course been fee compression across the board in traditional finance, but it hasn't quite been that way yet for crypto, whether it's you or Coinbase or whomever. They've all benefited greatly from the fees that they can charge. Do you see that coming down at all?
Yeah, I think it is. Just, if you look at the fee structure of crypto transactions, in general, they're less than traditional banking. So I remember early on in our crypto days, we sent something like $3 million over to Japan for our Japanese operations. Yeah. And we went to the bank to do a wire transfer, and with all their fees and charges, it was $3,000 or $4,000 to send this money over. We decided to send Bitcoin instead, and it cost us 98 cents. So there's a little bit of a difference in economies there, just using Bitcoin to move value, just to move dollar value. But in the exchange in between dollars and crypto, there's fees that can be, all over the place, depending on the exchange you're using. Yeah. And those, some of them have been very opportunistic and charging a lot. But you're finding now with larger, more organized companies like Coinbase is quite a large, well-known exchange in North America. And there's I just did some research on the exchanges because we're launching ours. There's over 1,000 exchanges out around the world. And as it grows, it gets bigger and they get more sophisticated. We're finding that fees have been coming down. You might have been charged 2% to 5% to exchange between crypto and fiat currency. That's getting down to 1% and lower. And because of that, you're getting into just like FX conversion rates between dollars, Canadian dollars and US dollars. It's getting more and more competitive as the landscape grows out.
I don't know if I knew. Yeah, I definitely did not know that there's over 1,000 exchanges out there. There's way more than 1,000 miners.
There's just literally hundreds of them, and they're small and trying to grow. They all have niche areas. Sure. But there's only a few really big ones like the Binances and the Coinbase and the Geminis.
Sure. All right, there's a bunch of questions in the chat, and I don't want to leave them hanging. I want to leave plenty of time for this because there could be more here. So let's start with this. Two of these are kind of related. I'll start with quantum. Have you considered hedging against the energy sector to reduce your overhead? Good question, quantum.
Have you considered hedging against energy sector to reduce overhead? Not sure I get that one.
Well, I guess like you guys use a lot of energy, right? Yeah. On the mining front.
Yeah.
So are there hedges that you?
Are you talking about purchasing? Are you talking about hedging as in purchasing power, purchasing forward power?
Yeah.
We don't do that right now. Right now we buy from our utility, and so we have a fixed price with firm delivery. And we've just found right now with the profitability of Bitcoin mining, it doesn't really make any sense for us to hedge out in the future. Normally, we would look at hedging strategies during what we call crypto winter, when the price is low versus the cost to create a Bitcoin. Then you would look at hedging out and trying to get better power savings. When you do hedge, it's really hard to get something called firm power. This is like 100% delivery of power. When you buy from a utility, you get 100% firm power. So if I'm hedging, I may or may not get delivery of power, and of course, that if I don't get delivery of power, I can't make Bitcoins. So when you hedge, normally you're giving up the possibility of getting all the power that you want to buy. So it doesn't make any financial sense for us to give up that ability to have firm power. So we don't hedge right now. Something we might do in the future is, if the cost of creating a Bitcoin gets squeezed by the value we can sell a Bitcoin for.
And so then on that same note, then if I'm out of ice, how do you minimize how do you maximize your energy use, your efficiency?
So I'm gonna have to put this on our website one day. We actually run it with something called parity, which means 100% of the energy that is going through our system is going right into our miners. That sounds really weird because we have ancillary lights in that, but it's I would say very close. I'm thinking about putting this on our website just to show it and explain it a bit better. We don't use other systems of cooling. We don't really use any ancillary power. We're running at a pretty close to 100% power going into our servers. But ways that you can actually get more efficient, besides buying more efficient equipment, is new technology. So one technology we've invested in is immersion cooling. And by using immersion cooling, we use less power because we take all the fans. They actually take a few hundred watts per fan per miner. You take them all off and save all that power. You put it into a fluid. You pump that fluid around the chips. The power of that pump is 1/100th of the power that you would have with the fans running. And you save about 18% from the studies we've done of power for the same amount of hash rate or the same amount of compute rate that you would get with the servers in an air-cooled environment. And so when you talk about efficiencies, so one of the best ways is to convert to a better technology, which is immersion cooling.
Okay, there's a few questions in the chat. Oh, I just almost knocked over my coffee, but I didn't. Mark M, did the topic of acquisitions come up? No, it did not, Mark, but now it is. So we already spoke about the acquisition that you made. You bought some more mining equipment. But as far as other acquisitions, as far as company acquisitions or being acquired, where are you on that front?
I would say that we've had a few people run it trying to acquire us in the past. So that always kind of happens as, there's a lot of companies that are bigger than us that see the assets we have and the technologies we have, and it's interesting for them for their growth. But on other acquisitions, one, we've acquired about 1 exahash of miners. We have about 375 petahash running of that 1 exahash. So we have a lot of deliveries coming over the next 6 to 9 months. We're looking at acquiring another exahash, so we're working on that. We plan on running 2 exahash at our facility in British Columbia. As well, we've announced previous, I would say, they're not quite acquisitions yet, but they're strategic partnerships with an investment. So we've invested $2 million into Bosonic, which is a layer 2 exchange. We've invested $3 million into Brain, which is a wallet technology that we're going to be launching as Breeze and Freeze for our wallets. We put another $1 million into another exchange. We haven't disclosed who it is yet. We are, at any given time, we're looking at 5 to 6 different sort of acquisitions or strategic partnerships. So always kind of watch us because we are looking at growth organically, which is just our employees and things we can do. But we're also looking at an M&A style of acquisitions to grow our technology quicker and faster and bring it faster to market. So we're definitely looking at, acquisitions of companies or more strategic investments where we become a large shareholder and ensure that, the partnership we want will be successful with whatever company it is.
Do you need a CX company to test your equipment?
Do I need a CX company?
Actually, I don't know if that would apply to you. Geoff, I'm not sure if you're behind or not. Never mind.
So we have our own facility where we test all of our own equipment. We do all of our prototyping. We also own 15% of a company called Black Box Manufacturing that was set up here in Vancouver, and it actually builds all of our proprietary equipment, all of our immersion tanks, all of our power channels, all our racking and distribution. So we're kind of lucky that we have our own manufacturing company that we can rely on.
All right. Yeah, he clarified a commissioning company. Thanks. I also didn't know what a CX company was.
Yeah.
So thank you for clarifying.
Yeah, commissioning. Normally, commissioning on the power side, we used a company called Pace. It's a well-known company across North America that does power commissioning. Outside of that, we just work with regular commissioning certification companies for our proprietary built equipment. So that's usually a CSA qualified company. So the Canadian standards.
Sheldon, if you can put your like contrarian hat on for a second here, what is like the most difficult thing right now that's facing your whether it's your company or the industry? Because there are a lot of these. I would call you guys, you're like half miner, but you're also like half blockchain as a service, and there are a lot of these blockchain companies that pivoted, along the way, and obviously it's a very emerging space, and we still don't really quite know. We know a lot, but we also don't know a lot in terms of how things will play out. What is the biggest hurdle right now?
I think you could put it in different categories. Operationally, what's the most difficult thing as a company? I still think it's the supply chain. Just how difficult it is to get things, how much the price has gone up. Things that we thought worked in a certain way have changed. But when you talk more broadly, what's the biggest sort of issue in our industry, especially about our industry growing? I think it's really all about regulation right now. The U.S. market is really coming around. The regulators are really coming around. They realize crypto's not leaving. It's here to stay. They realize they don't control it. It's not like it's government controlled assets. And so they're really trying to figure out, how do we work in a crypto world that's developing to protect our citizens? And I think it's as simple as that. How do we stop people from losing their money, being, fraudulent things happening, banks being able to use this without breaking OFAC regulations? So this, how do we make sure that, we can put the rules and regulations in that protect consumers in this industry? And I think that's really what's happening. You're seeing more and more Senate hearings about this. You're seeing more different parts of the government getting involved, putting out working papers, having discussions. And I think it's going to continue all through the next year, and hopefully get concluded, but it usually takes a little bit of time, because once the rules are known, I think you're going to see much more activity in crypto. I think you're going to see it's growing. I think you're going to start seeing, banks that you may recognize starting to invite you to put crypto into your accounts or be involved in crypto. And I think that's a real win for the whole industry. So once regulation can be understood, I think you're going to see a huge growth and adoption of crypto.
Okay, so on that note then, are you feeling more or less encouraged after last week? Because not that I watched the whole hearing, obviously, but I saw snippets here and there, and some of the stuff on there was really, really good. Some of it was really not. So,
but this education people just really aren't briefed that well, and are trying to figure this out, and it's hard. I mean, I've been doing this for many, many years, and to me, it's second nature, and I don't even consider some of these questions that are asked. Other people, it's the first time they've seen it. But the fact that the process has started and is going is a good thing. And normally in the US, when they take on a challenge, I'm Canadian, so I can say in the US, when you take on a challenge, like as a country, it's pretty good at figuring stuff out. Maybe not super fast, and that's just the way things are, but it's usually pretty good at figuring things out, putting in the right rules, and allowing people access to what they want. And, people want crypto. More and more people want crypto. More and more people ask about it. Open wallets, trying to figure out with their financial advisors, how do I get some Bitcoin? How do I get this asset instead of just gold? How do I add it? Once the rules are known and financial advisors and people and banks and institutions can start offering it, I think that this is going to be great for the U.S. economy. I think it's going to be great for every economy. And I think it's going to be great for our industry. And I think it's one of the things that most crypto companies like ours really want done.
All right, last one here. Sheldon, what's the next news event, next catalyst that we can look forward to?
The next news event in DMG will be probably around our core business. Some, I guess you could call it on the mergers and acquisition side, some more growth on our crypto mining side. So I think you'll see that one coming out hopefully before the end of the year, if not really early next year. It's pretty exciting. If things go as planned, our ability on the crypto mining side will grow exponentially, which I think our shareholders would love. And I hope, people will react positively to the effort we're putting into growing and expanding our core business.
I give you credit. You're a miner, but you're also not just a miner. You're diversifying across the space. I think that is probably prudent of you. So Sheldon Bennett is the CEO of DMG Blockchain. Let me just double check and make sure I didn't miss anything. I know there's a bunch of questions in there, and I hope I got to all of them. I think I did. Yeah, I think I did. All right, Sheldon, a pleasure as always. Have a good rest of your day. Thanks for joining us on All Access today.
Good to see you again. Thank you.
All right, have a good one. All right, before I bring on our next company, this company is also doing some really, really cool futuristic type stuff. And I think if you work in an office, you'll be interested in this next company. Before I bring them on, their company is called Oblong. And before I bring them on, though, I want to play a quick video from them. So I'm going to do that right now.
Great technology is invisible, an extension of ourselves, a tool that allows us to achieve more. But it's when this tool is combined with the right knowledge that technology becomes something greater.
Mezzanine technology to me is the way meetings should happen. Everybody who's gotten used to this, like myself, is going to be wondering, how did we ever do meetings before?
This condenses weeks and weeks and weeks of traditional activity into hours of activity, and that's a huge benefit.
Mezzanine technology to me is the way meetings should happen. Everybody who's gotten used to this, like myself, is going to be wondering, how did we ever do meetings before?
This condenses weeks and weeks and weeks of traditional activity into hours of activity. And that's a huge benefit for an occupier, particularly key decision makers, C-suite, whose time is really, really valuable.
What we discovered is a contextual, touching, organic piece of the puzzle, coupled with a great editorial story. Doesn't get better than that.
All right, let's bring on now the chairman and the CEO of Oblong, Mr. Peter Holst. Pete, how are we doing today?
Good, Spencer. How are you?
Doing fantastic. All right, that video actually created more questions than I already had. So maybe let's just start with this. What does Oblong do?
Yeah, Oblong provides an incredible sort of ideation presentation experience for people that are in room settings, conference room settings, office room settings, and we're looking to move that experience beyond the conference room into the cloud over the next year or so. And so if you're occupying a space today, and obviously that hasn't happened a lot in the last 18 months, right, during the pandemic, but naturally that will come back. And you want to have maximum user engagement, you would use a technology like Oblong to create experiences, to create content, and to present your content in a way that engages your audience in no other way that exists today.
Okay, so the history of Oblong is interesting because it used to be called Glowpoint, and it's been around for quite a while. You joined the company about a decade ago, right? Or
8 years ago, yeah, 2013.
Yeah, so a little bit less, and you joined us. You joined to become the CEO.
Right.
What did you see in Glowpoint then? Now Oblong.
Sure. Well, the whole evolution of IT and managed services, where Glowpoint had cut its teeth for many years, right, in the backbone of networking, And when I started looking at Oblong about 5 years ago, just through a related party in the Colorado area, which is one of the venture capital backers, and noticed how engaged people were. I saw them at a trade show actually about 5 years ago, and just noticed how much traffic there was around the booth and how people were literally interacting with information and just their facial expressions of how they were using the system. And I've gone to see them, 2 or 3 times over the years at various shows. And I think what mesmerized me most as someone who's been in the collaboration space for the better part of 20 years was that traditional collaboration has evolved at a very sort of linear pace. And so voice conferencing was a good thing, and then early stage web conferencing was a step up, and then video conferencing obviously has exploded during the pandemic for a whole host of reasons, and Zoom and Cisco and Microsoft and Google have certainly led that charge on the video side. But if you look at the statistics of how people actually engage in meetings, 2/3 of people usually have their mute button on during a meeting session.
Don't say it out loud.
It's the worst kept secret in the industry. I know, it's terrible. And that when people even join video conferences today, actually, 1/3 of the people turn their video camera off. They don't want to be seen. And so engagement by definition drops, right? When you minimize the modalities of these virtual meetings, people move on and they multitask and they do other things. And so what fascinated me about Oblong was everyone has to be engaged during a session.
So I remember going to take your child to work day. This is in the late 90s. I was probably like 10 years old. My dad worked for like AT&T, and I remember seeing video conferencing for the first time. They connected us to an office that was in like Denver or wherever, and it literally blew my mind.
Right.
That they could see us and we could see them. And we were on video. Did you have one of those like moments with Oblong?
I did. I mean, again, having seen the evolution of this entire industry from the late 90s kind of to present day, you see these stepstones, right? That sort of are functional stepstones in how people engage and how you create these remote experiences. Remote meetings have been around since the early 90s, actually, right? Microsoft really invented the remote meeting experience in their first iteration back in their early days. And the same problem that I've been trying to look for something to solve for many, many years sort of hit me right in the face when I saw Oblong's technology. It's just this notion of, if you peel it back, right, most meetings today have about 3 or 4 people in them. That's what the average meeting size of a remote meeting. They generally last 30 to 45 minutes, right? And there's usually a leader that sets a meeting, and then there's some followers, right, that sort of listen to the presentation on the fly. And so it sort of destroys this notion of collaboration, right, which is what the space has called itself for many years. And what Oblong does is it says, no, this is what collaboration really means. We're all sharing information simultaneously. We're all interacting with the data in our own unique way, and we're creating content in a way that is contextual, and it sort of embraces what our cognitive nature really is, right, as human beings. And so you're getting to things faster because you have everything in front of you. You see all the information, right? And when you see it all, you can make decisions better. And that's what hit me about Oblong, was just contextual collaboration, right, in your face.
Okay, so then explain exactly what this is. It's a platform. It's a device. Like if Benzinga wanted to use Oblong, like what do we do here?
Sure. Yeah. No. It's a device, right, with our software that sits on top of the device today. And so we ship you a small little micro PC, if you will, and that gets installed in your conference room today, irrespective of what size it is. Sometimes people have these sort of sophisticated conference rooms where they have multiple screens everywhere. Sometimes people used to refer them as network operating centers or executive briefing centers or experience rooms, right? But the contemporary use of the technology today is the next conference room, right? So everybody on the planet today is looking at their real estate footprints and saying, what am I going to do to bring people back to the office and create engagement, right? Bagels and coffee is not going to cut it. And so we're going to have to put some technology in place that creates maximum engagement and draws people back in to build that community that we had pre-pandemic. And so we ship you that device. We install that either behind your displays because it's pretty small, or we can install it in a credenza or maybe a local closet or something, right? Server area. And then we integrate that system with all the other components, AV components that are typically in a conference room today. So it's a very small shippable device, and it gets installed inside your conference room today. So if you were to buy it, that's how it would land, and we would do the install, or one of our partners, potentially AV or system integrator partners, would do the install on your premise.
I noticed what you haven't said yet. You haven't dropped the M word yet, but I see what your technology does, and I think metaverse.
Right.
That's the first thing that comes to mind.
Yeah.
Is
I
that
get question.
You get that question a lot? Okay, good. I'm not the only one.
Yeah. So it's interesting, right? In many ways, Oblong has been working on a version of the metaverse since it was founded 20 years ago. And the notion of computing and using spatial and gestural interaction is really the foundation of where Oblong cut its teeth, right? And so for the last 20 plus years, and you can probably see it in some of the things we've done here in the Los Angeles area and with many of our customers, they haven't used that term, the metaverse. It's become very sort of au rigueur lately, right? Obviously with what's going on with Meta and a few others, quite frankly, in the space, Microsoft. But if you think about it, right, we do a functional metaverse. We do a real metaverse today, right? Sort of an industrial metaverse, if you will, right? We take content and data, and we ask you to interact with that information in a functional way today, right? We don't make you put a big headset on or goggles or anything like that. And that's all cool. And that's, N number of years down the road. What we propose today is, hey, we're all going to evolve there over the next 5 or 10 years. And whatever the metaverse looks like downstream, will be something where humans will be interacting with information, probably using some type of kinetic touch or haptics, right? Or virtual touch using their hands or gloves or some type of system. We actually deliver that system today, right? We put that power in your hands to introduce you to what the metaverse will be in the next 5 or 10 years through some of these much bigger platforms. And we do it in a more sort of human way. So
what kind of partnerships does Oblong have?
Yeah, so we have a number of sort of industrial partnerships, right, with our hardware and software companies that we work with today. And in terms of go-to-market, we work with most of the largest system integrators and audiovisual integrators who have traditionally been around the commercial real estate ecosystem, right, building out experiences for their clients. But in the past, right, we've partnered with the likes of IBM, we've partnered with McKinsey, we've partnered with any number of consulting companies who are looking for that sort of super unique experience today, right, that you really just can't get other than using something that's highly interactive.
All right. It's so interesting because, and this is, you're not the first company I've said this to today, but you're one of these companies that sort of accidentally found yourselves in a position to benefit from the pandemic. Can you just speak to what the last 2 years have been like for the business?
Yeah, as I mentioned, right, obviously our technology today is sold primarily into experience centers and conference rooms, right? And as we shrink that hardware footprint and try to make it more cloud experience, right? So we can deliver that experience both from the cloud and into the physical space. The spaces around offices are still very, very quiet, right, for the last 18 months in particular. And so while that's been pretty challenging for us as a business, a lot of our customers are saying we're starting to come back, right? We're starting to sort of see things move up. If you look at all the real estate statistics from CBRE or JLL, you'll see that occupancy levels, which have been incredibly low, are now at about 35%, right, in certain major markets. And they see that ticking up bit by bit every month. And so, as I said earlier, while our technology historically has been very office centric, we are moving that technology, and we've got a beta version out there available that sort of shows you what you can do with our technology, but in the cloud setting, right, from a remote setting. So as we make that move from physical space to cloud, we see our market, our addressable market, obviously expanding, 100x, 1000x from where it is today. But our roots are still based in that space. And so our partners have been slowly but surely kind of creeping out saying, hey, our customers are looking for something more. It can't be just a digital this or a digital that. We need something to really, truly engage our employees, our fellow coworkers, and we need something to sort of ideate and co-create in a way that we haven't been able to do before. And so we're starting to see things pick up in the last really 6 to 8 weeks, quite frankly, Omicron aside and variants aside. But we are starting to see signs that people are like, listen, 2022, 2021 and 20 have been difficult, but 2022, we really have to transform our digital footprint. And if we're going to maximize the experience for all of our employees, we need something unique. We need something different.
What is to stop a Microsoft, a Zoom, one of these companies from doing what you're doing?
Yeah, that's I think anybody in software will say anybody can copy anybody anytime, right? It doesn't take long to copy anybody and replicate things. I think first mover advantage is a big thing for us, right? I think we have been doing this for a very long time. We have created an experience that is very, very difficult to replicate in terms of interacting with information in a very unique way in the conference room. And one of the old adages, and I'm sure you've done this, right? Have you ever gone into the conference room and sort of looked on the table and said, don't touch that button or don't touch that button, and if you touch that one, it'll break this, and that dongle attaches to this, and it's like a hot mess, essentially. We're trying to minimize that brain damage, right? When you walk in a room and say, we want the remote person who's at home now and probably won't commute more than 1 or 2 days a week to have that same interactive, cool experience that you get in these big visual display systems, right? That you get in the conference room. And I think everybody's complained about that, right? When somebody's in a room and there's 2 or 3 people, you lose context, right? There's just that eye contact and that interaction that you get person to person that you can't really replicate, right, in these virtual experiences. And you want people to see the same thing at the same time. You want them to be able to share that information in a way that's elegant, but also transparent to everyone. And you want sort of a summary of that, right? Like you want to be able to capture what that information was, because you're going to move to the next meeting, just like you are here in a second, right? You're going to have the next guest and the next guest and the next guest, and that context drops throughout the day. So you want to have that experience where we captured all that information, we have a record of it, we're going to share it with you so that you're moving along a path to solving problems, creating products, right? Overcoming issues much, much faster because you don't lose context from the last meeting.
Couple more questions here. First off, and this is also from our chat, how much does this cost?
Yeah. So the typical experience that we've sold in the past can range anywhere from $10,000 up to $50,000, right, for a configuration and install in a pretty fancy conference room, right? What we're looking to do is, and we've made some changes actually to our hardware footprint and our software footprint. We're actually going to reprice some of those things in very short order to accommodate kind of where the market is. And then when we offer a cloud service, you'll sort of get it at conventional, I should say, kind of cloud pricing services, right? Which are very, very cheap, typically done on a monthly basis or an annual recurring basis. And we're actually moving our products here in 2022, both the hardware product in the room and the software product, to annual recurring revenue models.
Okay, so it is a subscription. I assumed that, but
you can buy it both ways today, buy subscription and one time. Yeah,
sure. And then last question here for you, Peter, is obviously your business is predicated on the idea that remote work is here to stay. I'm personally speaking as someone who's been coming into the office now for a while, like a year and a half now. I mean, I like going to the office. You know what I mean? I don't know how convinced I am that remote work. Maybe some people that at Benzinga have never come back to the office, but so they're the opposite of me. But like, is there a place here or in a world where remote work maybe isn't as big as some people think it could be? How does that affect things?
Yeah, there are many schools of thought, right, around the notion of remote work in the future, and what a common, most overused term is hybrid work, right? And we're a believer in both fundamentally, right? You see the trends, and it's not as if the pandemic forced some massive event where remote work all of a sudden was forced. Remote work has been happening for 25 years, right?
Sure.
It's just slowly but surely getting to a point, and then it spikes, and then it'll settle back to some sort of level of normalcy. But remote work, right, is here to stay, right? Knowledge workers can work from anywhere, anytime, any place. And Oblong believes that the optimal solution will be found in those that embrace in-office experiences, right? As long as you put the right technology around people and the right incentives to come in and use that technology. But it also has to embrace those who choose to work remotely and can work remotely, quite frankly, right? And there's literally hundreds of millions of people now that will be able to work remotely on a full or part-time basis forever.
Yeah. I think a lot of it probably just comes down to where do you live, where do you work? Commuting to New York, I've done it, is miserable.
Or LA, right? Where I am today, it's pouring rain outside. It's like a 3-hour commute, right? From
miserable. I live in Detroit. Commuting really ain't that bad, actually. Right. So actually, it's kind of nice. So it just depends on where you are. But Peter Holst is the chairman and CEO of Oblong, giving us a lot to think about here about the future of work, the future of meetings. So Peter, thank you so much for coming on All Access today. Have a good rest of your day.
Great. Thanks, Spencer. Appreciate it.
All right, we're going to move this right along, and I've got my next guest here. We're going to pivot away from the metaverse and virtual or hybrid meetings, whatever you would call those, to CPG, consumer packaged goods. That is the space we're going to go into next with our next guest, Ricky Wright. I see him here lurking backstage. Ricky, I'll bring you on in a second. Ricky is the president and CEO of Alkaline Water. I am curious about the water aspect of this, but I also am very curious to hear about Ricky's thoughts on just the CPG space. Distribution. We talked to Winc earlier. They were direct to consumer. They used that as their entree to get into the wholesale market. Alkaline Water, a very different model. So we'll talk about that and more. As always, want to encourage everyone, if you have a question, drop your question in the chat. Don't be shy. Seriously, don't be shy. I will ask your question. So maybe don't ask a question if you're not serious, but because I might blurt it out and then we'd all be embarrassed. So ask your question, hit the like button. Let's bring on Ricky Wright, the president and CEO of Alkaline Water. Ricky, how are we doing today?
Good, Spencer. Happy to see you again.
Great to see you. It's been a while since we spoke. So very quickly, Ricky, tell us about, I can guess what you do for the name of your company, but tell us about the business and how it's structured.
Yeah, so we are the largest independent bottled water company in the country. That means that one of the global beverages has not bought us yet. I use that word with a hopeful yet. And we're about the 7th largest in the grocery channel chain, and we're the 8th or 9th largest overall in the enhanced space. So, from a company that was 9 years ago, and actually it's 9 years and 2 days ago. So we just had our anniversary two days ago for our 9th anniversary. And we have a model where we've been direct to warehouse. Going back to your point, we really started in the grocery channel. We've had great success. One of the things that I came to this company with was a manufacturing background. And so 2 years ago, we actually moved most of our stuff to the U.S. When Trump had announced the tariffs. And so we've been a company that has been able to supply both during COVID, post-COVID, and in the current environment where most companies are having supply chain problems. Because everything's here domestically, we've really done a great job being able to provide where others haven't. So we continue to be the only company in the country in the top 10 that has grown double digits every 4 weeks comparatively since 2019. We haven't had that down where we've gotten hurt by supply chain or down where we've gotten hurt by COVID constraints.
I want to know more about that manufacturing background and that supply chain. So, we've heard from companies, like Amazon, that have just built out their whole supply chain themselves because they don't want to be at the mercy of the global supply chain. Tell us how you built out your supply chain.
Well, a couple of different things. In this particular year, we identified clear back in February that we were competing with the U.S. government for labor. And we assumed that we were not going to be able to get any additional shifts on. So we literally added 4 new co-packers. So we knew that was going to be almost impossible to get labor. So we literally went out and entered brand new contracts with brand new guys that could at least give us 1 shift each. And that actually has brought us to greater than COVID level production capabilities, which is crazy good. The other thing we did is that, we're a pretty simple business, right? I've got boxes, I've got caps, I've got labels, I've got bottles, I've got preforms. I mean, there's only about 10 components that go into this company overall in terms of macro components. And we just made sure that, 1, we had redundancy. So if A couldn't supply, B could.
Sure.
2, we didn't kill our international production, but we slowed it down and brought 99% of that to the U.S. Okay, so we still have international stuff. We still have stuff on the port outside of LA sitting on the water, but it didn't cripple us because we had redundancy here in the U.S. and we just upped our U.S. production over the past 12 months. So last 24 months, we've primarily been a made in the USA company.
Awesome. So tell us, just give us a quick overview of the portfolio of products that you have.
Yeah, so right now you can kind of see behind me. I mean, we've got a flavored water, we've got an aluminum water, our big boys, the gallon and the bulk water. You can see that actually is the #1 selling bulk water in the country, and there's nobody even close to us in terms of a premium water. I think we have probably 80% of that market in terms of branded market. And in addition, we have we've just begun to market. We've got some POs on this already. And this is our, can't use that one because it's not a great color contrast, but we have a new product that we use, a new technology, we call it the fresh cap vessel technology that we literally, it's already mixed. And this is for CBD. This is also for other functional beverages. So we've moved a little bit in terms of a company, not having our strictly a functional beverages only hydration, which is the alkaline water, but we've also moved other functionalities. This is my re-energize. It's mixed. It's ready to go. Way different than the ones where you drop in and you have to shake them up to get it to go. This one does it automatically. And we're coming out with 6 or 7 of those in a functional water only.
I'm curious.
First, excuse me, one more.
Yeah.
It's the aluminum bottles. And I'll bring up a cold one because it's much better. The aluminum bottle. And this one we've got in 2 sizes. We've got the 16 and we've got a 25 ounce. So
Ricky, when you and I spoke a couple years ago, and the crux of our conversation was about the CBD. That was one of the cruxes of the conversation. And at the time, obviously, it still is, an emerging market. But at the time, it was even newer. How has the CBD beverage market progressed on Alkaline's front in the last couple of years?
Most of our category has to do with, if you look at our portfolio, we're in HEB, we're in Walmart, we're in Kroger, Albertsons,
right?
Publix, we're in the big boys, CVS, Rite Aid. So, most of our guys never pulled the trigger because FDA never gave the green light. So what's really happened in the last 3 months, 2.5 months, is that AB 45, which is the California rule, came in. New York is now doing ingestibles, which they weren't 6 months ago, 5 months ago. And Texas has been online for about 8 or 9 months. So there's 51 million people now, adults in those markets that didn't exist really 6 months ago. And so we did 7 shows this fall with this particular product. And I love the impact, so I'll just try another one here and see if I get another. Ooh, this one's.
I love the
great response.
I love the chat here. Some people are like, "Really, alkaline water?" Other people are like, "Yeah, my in-laws drink it. I drink it all the time." You did recently sign on. Shaq joined your advisory board. In all seriousness, Shaq is like an amazing businessman. He was, I think, the very first person that I followed on Twitter in like 2008. The guy's got like a bunch. What is he on? Like a bunch of Pizza Huts or Papa John's. I don't even remember what. But the guy knows what he's doing on the business front. So, and you've got him on your advisory board, which I think is notable because the guy knows his stuff. There's a bunch of questions in the chat. I see them. I will get to your questions. I promise. But I just have a couple more on my end, and then I'll get to you. First up for you, Ricky, is what is the biggest driver of growth right now?
Well, we got basically 5 drivers of growth, but if I was to look, we have not had resets. We've done 20+% growth prior 2 years, and we've been doing that with about the same number of stores, right? 70,000 or thereabouts. And so, our primary growth is we're going to see some resets in our stores that we did not get. So, I'm looking for us to get in from 75 to 90 to 110,000 stores this year. So for the first time in 2 years, the category buyers are looking and saying, okay, this 24 feet or 48 linear feet, what brands are we going to put on there? And we know a lot of them are going to do this brand right here, which, by the way, this is in the Shack Pack. This is our new 2-liter. So you can see Mr. Shack Pack behind us, and that's our 2-liter for Shack Pack.
Yeah, he would need a bigger one. And then Quantum is asking a question that that was also on my list, which was, and he's sort of already mentioned this, Ricky, but just real quick, what is your distribution like? You mentioned are you in all the major national retailers?
We're about, our ACV is about 45% to 48%, depends on which channel, all channels and/or grocery only. So we've got growth, but the big targets for us are Northeast, which we only have about 0.8% of the market. The Midwest, where we have like 1.8, but in Southern, both Southeast and Southwest, we're almost 4 or 5% of the market. So we're huge relative to the fact that you've got 100 different bottled beverage companies out there. So we feel really good about where we are in those 2 markets, and we see growth in the Midwest and the Northeast, and we see those coming through a lot of new chains this year.
All right, I'm going to have to give more time for questions from the chat than I thought because there are a lot of them. So Chris Ruggieri, pretty sure I got that right, Chris, asked, this is a technical question, what is the flow rate of the pH nutrients on average between bottles?
Wow, don't even know for sure what that question is.
Okay, that's fair. I don't know what it means either. I was hoping you would know.
Between 8.8 and 9.2. Okay, and we use an ionization process. I mean, one of the nice things, you see the little label is the little leaf. It says clean beverage. We are the cleanest enhanced water in the country. We only have 2 ingredients. If you look at some of my competitors, which are on my shelf, they're all using buffers. And so we use an ionization process that allows us to do that 8.8 to 9.2. And we have a shelf stability of about 3 years based on our own test. The FDA only allows us to put 2 years on the label.
What exactly is the difference between Alkaline 88 and what the other products that are out there?
We don't use a buffer. If you read their labels, then I could stand up and grab one, or Geoff could hand me the core bottle behind Geoff right over here. There's stuff in there that I can't pronounce. There's in this case there is there's bicarbonate. Let's see what's in here. Potassium bicarbonate, magnesium chloride, calcium chloride, which is salt. And so there's stuff in here that they're actually increasing their pH, not through an ionization process, but through adding chemicals or minerals. Excuse me, not chemicals, but minerals.
Buglog wants to know what your future expansion plans are via M&A, for example, as one idea.
So it's a great question. I mean, we could do one of 2 things. One of the reasons we're going to functional water is that, obviously Celsius made a great pivot. They moved away from just losing weight to, a lifestyle with energy, right? So that's one. We could continue to grow on NASDAQ and hopefully, pull off a little bit of a Celsius. If you look 2 years ago, our sales and their sales 2 years ago in the past quarter were almost identical in domestic. And if you look at our most recent press releases, We've gone away a little bit from our direct to warehouse model and that fact that we've tested direct store distributions. You know, we've used an ABG house here in Arizona, Hensley. So we're looking to get greater distribution in the areas we're not. And the best way to do that is in the C stores, and that's through DSDs. So we could do that. Or, you know, when we hit a certain number, you know, they almost have to come and get you. You know, there's only, it's like ocean property, right? There's only so much beach. And there's only so many linear feet in a grocery channel. And as long as I continue to occupy my 8 to 24 feet, at some point I just become a pain in the ass. Excuse my
No, that's great. I love it. Reaugh King is asking if you are open to franchising in other countries.
We are currently in Canada and Mexico. Right now, we're not interested in franchise. Although I've done business in 42 countries, the machine was originally developed for expansion, but we have so much meat on the bone here in the U.S. that and in North America that right now we're not looking to do a ton overseas, other than our current geographic locations.
RM asking a good question here. You know, bottled water obviously has a very large environmental impact. So what does Alkaline do to reduce your environmental footprint?
So, you know, the irony is that we were the guys with the first vision. We went with a big bottle. At the time, it was 6 times less plastic than the same equivalent in terms of volume for smaller bottles. So now that's moved down a little bit because the smaller bottles have reduced their amount of plastic in them, and so we're about a 3.5 times. But we've also gone to our recycled PET. We're actually ahead of the standards that California has in 2023. So we're way ahead of that game. You know, this little baby here on the recycle of aluminum, you can recycle it forever. So we were the first national brand to have an aluminum bottle. So we're part of that. Part of the reasons that we have all the different locations in the country, it's not like I couldn't have one big plant and push out water from that big plant, but having 13 plants around the country allows us to have a much smaller carbon footprint on transportation. So there's a lot of things that we do. This thing here, ultimately, you know, there's an opportunity maybe in the future to make the fresh cap more like a Current cap, right? That we just send these, and then, you know, you buy your water locally or whatever, and then you put it on, twist, and you get your functionality that way. So we're always thinking towards an environmental answer, sustainability answer.
Okay, we'll do one more from the chat, and then I got to wrap up with a couple. Christian Gallagher asks, when do you expect to become profitable?
You know, we're not really focused on the profitability section as much as we are focused on sales. One of the things that I don't think people understand is that, you know, I don't believe that Vitamin Water, Smart Water ever made a dime before they got sold. I know Cinch's had, you know, I know they've only had a few years where they've any profitability at all. Flow Water, Corp, I think never made a dime. It's all about guys establishing a brand. You have to make yourself attractive. Ultimately, I could go profitable tomorrow because I could get away from any kind of growth, and I could just sell to everybody that I already sell truckloads into, and I make money on every truckload I sell. But then that would mean that Rite Aid would not have come on last year, because every whether it be Rite Aid, CVS, Walmart, every single brand you go into, banner, it takes a while for the consumer to catch up that product's on your shelf, and you need to buy full truckloads to meet the demand. And it's just a function of how the business runs. So we look to actually have, you know, 6 straight quarters of 50% or more growth. That's my current goal and objective as a company. And we're going to do that through international, direct store distribution, hospitality, e-commerce, our new functional waters, and growing into some of those clubs and specialty retailers that we have not been able to hit up in the past for the last 2 years because of COVID.
So, Ricky, I want to end it with this. You have a background in like accounting, right, and manufacturing. Why alkaline water? Like what exactly got you interested? Because I would imagine what got you interested is theoretically the same thing that could get others interested. So, like, what did you see that made you basically you made a career pivot like 8 years ago?
Yeah, well, you know, I've been a serial entrepreneur. I've been blessed enough to actually have been retired at one time based on some entrepreneurial ventures. So, you know, I was at the Big Four for 12 years or 8 years, whatever, 10 years, whatever it was. But then I became a restaurateur. I've been in manufacturing. I've been in banking. You know, I've had a bunch of businesses over my lifetime. What caused this is a simple question of, does it meet my 11 criteria? Low people, low capital, annuity, cash flow margins. Nothing happens without a sale. Do you have access, benefit, capability, and is there demand? And sales and demand are the two, because otherwise you just have a hobby. You can have the greatest idea in the world, and I work with rocket scientists that have. And guess what? If you cannot find somebody to buy it at a profit for you and a profit for them, then it's probably not going to happen. And so water met that criteria, and alkaline water particularly met that criteria. And we had a guy that 9 years ago, literally the conversation said, Fiji's the best tasting water in the world. Make me want to taste like Fiji. It happened to be a great alkaline water, and that's how Alkaline 88 was founded. And we have the best tasting water in the world. I mean, we use that smooth hydration and deliciously smooth for a reason. I truly believe that everything we put in a bottle tastes great. And I think that's the number one key. If you're putting any consumer products in somebody's mouth, make sure it tastes great.
I love the 11 criteria. That's a lot of factors. But I think that's generally a good way to approach life and to approach business. So Ricky Wright, the president and CEO of the Alkaline Water Company. Ricky, it is always a pleasure to chat with you. It's been a long time. Thanks for coming on All Access today.
Thank you, Spencer. Have a great holiday.
You too. I should have been wishing all of our guests a happy new year. Oops. I'll do it for our next one. How about that? Thank you, Ricky, for the reminder. Joe Furnari is the CEO of Karr. Let's get Joe on this show right now. Let's have Joe bring us home. Joe, first off, before I forget, happy holidays.
Happy holidays, Spencer. Thanks for having us.
All right. You and I have spoken. I think we last spoke about a month and a half ago, maybe a little bit more at this point. Who can even say time is a circle? But tell us about Karr. You have a very interesting business model and business, frankly.
Yeah, so Karr is renting cars to gig drivers being Uber, Lyft, Postmates, Instacart, Grubhub, all of the kind of services, last mile services that we are starting to come to depend on. Certainly pre-pandemic ride sharing, but post-pandemic food delivery. So we are renting cars to drivers. A lot of those drivers that are playing in the gig space either don't have a car that qualifies for ride sharing, and or need a car in a short term because their current car was in an accident or is being serviced. So the tremendous demand coming for our services, and we're excited at this point.
So, Joe, you have a background in finance. You worked on Wall Street. You worked for an investment company. And then a few years ago, you up and left that career where you presumably had a nice, stable income and career trajectory, and you went to work for Karr. Why did you? I'm always fascinated when people make career pivots like that. So why did you do that?
Yeah, well, I saw the opportunity. For me, when I was working and walking to work, I had an extra car in the garage. I found Karr in its infancy. I had posted my car. I was one of the first people to rent my car on the platform. And then as I started to kind of ramp up my personal vehicle inventory, went up to 4 cars, I was seeing a tidal wave of demand for the cars. And I was seeing a tremendous opportunity there, something that, I never would have thought, right? Somebody's going to rent a car to drive for Uber and Lyft. This was back in 2015. But as you started to touch and feel the market, from just my, personal experience, I said, this is amazing. This is a viable business opportunity. And so when we jumped in, I jumped in head first, right? I quit cushy banking job, and it was the 4 of us sitting around a Starbucks table collecting free Wi-Fi. And we kind of grew it to where it is today based on that demand. The vision has always been really clear for me. I think that was, Ricky talked about his 11 business principles, which is pretty amazing that he can recite them.
I know. I also thought that.
I was pretty impressed with that. For me, it was like, all right, can I see $1 billion opportunity? And with the sheer volume of leads that were coming through the site, it was absolutely, I could very clearly see it that as we add cars, every 10,000 cars is $90 million in run rate revenue for us. So as we continually add cars into the future, I mean, you're talking about a multi-billion dollar industry that nobody was really playing in at that time. And it was mainly because of the insurance aspect of the business. Drivers needed insurance in their name at the time of the rental. And, typically rental car companies have an umbrella policy where drivers don't get their insurance in their name. And so that's been one of the moats. That was also one of the things that really attracted me to the business at that time. There was a moat around the business from this new emerging insurance frontier that was kind of starting to play out because the TNCs were starting to be regulated, and all of that legislation was starting to flow through the United States. So between kind of the demand side of the business, the supply constraint that we were seeing from cars, and then the insurance wrap around the business, it was a three-step business principle that made me kind of quit my job and jump in.
So where do the cars come from besides your garage?
So originally the platform was founded as peer-to-peer, right? People like me with one extra car putting it on the site. We very quickly saw that we were having trouble scaling that type of business model. And so we moved to, we call it a commercial or institutional supply, where we started to see kind of rental car companies, small rental car companies, dealerships, both franchise and independent dealerships, were all coming online and posting their cars in the market because they have excess inventory. So we made a very clear pivot by bringing on our current president, Brian Allen, who had 40 years of experience at Galpin Ford here in Southern California. They were the largest Ford dealer, largest Volvo dealer in the world. And with his kind of black book of connections coming into the business, we were rarely able to kind of shift the mix of inventory on the site. So we went from 80-90% peer-to-peer individuals renting cars to now it's completely flipped. It's like 75%, 80% commercial fleets. These are fleets that are people that have 5 cars or more renting cars on the site. So now with the chip shortages and supply chain logistics and all that stuff that's out there right now, we've kind of had to pivot again, and now we're going to specialty or purpose bought fleet. We're helping all of our commercial fleets, the top 30 that are basically paying us a subscription fee right now on a monthly basis. We're helping them find financing so they can go out and buy cars at auction.
Wouldn't a car shortage in a way kind of help your business, because it would you would give incentive to people that are not using their cars to capacity to make use of them? I'm trying to understand how your business would operate in different environments.
Yeah, well, it's interesting. So when originally when the pandemic hit, we had to very kind of nimbly bounce to delivery services. So we rebranded TalkScripts and all that stuff. That's on the driver side. So as we made that rebrand, you still have a tremendous amount of demand coming, and supply shortages absolutely exacerbate that issue for drivers, right? So we've got a ton of demand coming on. And then on the flip side, you have the driver side, or the vehicle owner side, where our main business pre-pandemic was renting for and renting from dealerships, auto dealerships. So as we started to see auto dealerships and supply chain issues kind of affecting them into 2021, we've really had to go out and partner with some of our larger fleets to have them buy purpose-bought vehicles, specifically for the hire car site. So that's how we're going after those types of those fleets now, is that, all right, we have a fleet, you have a fleet built, what the optimal basis is for that vehicle to operate a car on the hire car platform profitably. We have insurance partnerships, telematics, tickets and tolls, partnerships. So we're essentially, what we're doing is creating an ecosystem for these larger fleets to be able to operate at scale.
Sure.
While also kind of providing those resources to those individuals that are still renting on the site.
One of the things I find so interesting, and I give you guys all the credit in the world, where just like Uber and Lyft and Airbnb, you're creating a market where there was none previously. So what are the challenges of doing that?
Being a pioneer, I think there's the old saying: the pioneers get the pioneers get the arrows, and the settlers prosper. So we have certainly taken our share of arrows at being a pioneer, but as part of that, we have now the data to really learn and iterate a lot faster than the competition. What I'm seeing is there's a lot of kind of small micro regional fleets that are coming into this space, but they're learning the same expensive lessons that we learned back in 2016, 2017. We've already learned it. That's why we're able to scale. That's why we have 6,000 gross cars on our platform right now, rented and available. And so, we are really the only meaningful fleet that's kind of out there right now in this space, that's playing in this space. And so, being that primary mover has really helped us from an insurance perspective, from an operational logistics perspective, fleet software perspective, to really help our customers run profitable businesses, which is key. So retention rates are a big piece of what we look at from a owner side, retention rates from a driver side, and they've been trending up, best that we've seen, in the history of hire car. So it's I'm excited for that.
And one of the other things I find interesting is there's definitely been some criticism on Wall Street of tech companies that are like super high growth that wait to IPO till much later in their cycle, much later in their story. Like Uber, for example, was around for 10 years, like a whole decade prior to their IPO. You guys didn't do that. You guys IPO'd earlier in your life cycle.
Yeah.
What was the thought process behind that?
Well, I agree with those critics. A lot of the value gets sucked out of those companies from the VCs. And so when we were, at that point, it was 2017, when we kind of came to the crossroads where, are we going to do a traditional Series A round? Or are we going to do a pipe and take it public? I think a lot of companies at our size at that time wouldn't have had that option to go down that public, what we call public venture. But so with some of my connections in New York, the investment banks that we knew out there that specialized in micro cap or small cap, we were able to kind of have that option. And when we started talking to those investment banks and their retail investors that were, putting money in pipes and bridges, they loved the story. And so it really enabled us to be able to go down this route. And I think what we've done is really created a lot of value for a lot of shareholders. We were able to monetize that early, and really kind of grow leveraging public funds, which are, I think from a shareholder founder perspective, a lot better in terms of dilution events than maybe going down the traditional VC route.
Yeah, you can't have it both ways. You can't complain that companies are going public too late and all the values being sucked out, and then also complain about companies going public too early. You know what I mean? You kind of got to pick a side there. Joe, why would someone use hire car versus any one of your competitors out there via traditional or Hertz, Avis, or even like an Uber or Lyft, frankly?
Right. Well, so what they do right now is like, let's say for an Uber driver, a potential Uber driver, they come in, they download the app. That driver then is asked basically the second question: do you have a car that qualifies? If the answer is no, then they send them to Uber sends that lead to their Bonjour site, which is the vehicle solutions site. And they have an option to rent from Hire Karr, from Hertz and Avis, and maybe a couple others, hyper regional. Typically what happens is we are the low cost provider. Because of the kind of crowdsourced nature of our vehicles, we're running fleet a lot cheaper than where like a Hertz or an Avis can run fleet. And so price is typically number one there. Number two is convenience. And then number three is flexibility across the different the different vehicles and vehicle platforms. I think you touched on a good point, which is we just recently are now in the Bonjour sites at Uber. That was a deal that we announced in mid-November. And so we're in Los Angeles, San Francisco, Atlanta right now, specifically for electric vehicles, because Uber and Lyft are making a big push, as are we, making a big push to get electric vehicles on the site. So where all of those leads flow through, they have the option to pick for browse inventory and then rent cars. So,
all right, outside of Uber, Lyft, and food delivery, what are the other use cases? Why would I want to use Hire Karr? I not as a car supplier, but as a renter.
As a renter, yeah. So renters right now are making $40 an hour. So they are with the great resignation that we're seeing in the country. People resign and then they're looking for a job.
Wait, $40 an hour?
They're making $40 an hour right now.
For renting my car to somebody.
Yeah, well, no, these are drivers. So drivers.
Oh, is it drivers?
Drivers are making $40 an hour driving for Uber, driving for Lyft. That is as per Dara and Logan over at Uber and Lyft. So they're making great money right now. Partly amplified because of the car shortages and shortage of driver supply. And so there's your answer, right? So now as a driver, I can drive, I can make $40 an hour. Do I put it on my leased car that has a limit of 12,000, 15,000 miles a year? Or do I go out, rent a car for $350 a week and put those miles on that car? And I think, the amount of volume that we're seeing speaks for itself. They're voting with their feet at this point. They're coming to our sites to rent cars.
Yeah. So, I mean, I am questioning my life choices right now. If I could make $40 an hour to sit in my car all day and drive around town, not even drive the highways, just drive local roads. I didn't realize it was that high. If anyone in the chat does food delivery on the side, holler at your boy. Let me know what your experience is like. Okay, so you're only in a couple markets right now. There was a question in the chat about, I think somebody asked about Canada, but just can you speak about your expectations for next year as far as what new markets you will be into?
Well, so we're in all 50 states right now. The idea is that what the pandemic has done is created an opportunity for us to really dominate this market. And so we're going to go in and focus. We're focused on North America. I want 16,000 cars by the end of next year on this platform. Still TBD whether the secondary used car markets are going to support that. But we're seeing some green shoots right now in terms of used car supply coming from the rental car companies. So it's starting to loosen up, which is really, really good news for us, because we're at the cutting edge of where we need to be in this market. So that's where we're going to focus for now over the next couple of years. And then what the TNCs, Uber and Lyft, have told us is that our business model works really, really well in kind of Europe and Southeast Asia and South America. So I think eventually we go there, but we need to focus on dominating our market, get to EBITDA neutral, and show that we have a viable business. I think that's what the street wants to see right now, on top of being able to grow. So that's what we're going to do through the end of 22 and 23, and then start to explore the options in 24, 25.
And Sadat actually had that question in the chat as well. He asked about your EBITDA margin, considering this is, I'll bring up his comment here, a platform play. Can you speak more to that?
Right. Yeah. I mean, EBITDA at scale of this business, we're 25 to 30% net profit margin.
Okay.
We need to get there and show people that, because I can see it as we model it out. I can see it as we start to grow, but we need to show that to the street. So putting together some consecutive quarters of nice growth, stable margin is where we're focused right now going into 22.
All right. Always easier said than done. But I wish you the best of luck, Joe. Again, mad respect for creating a market where there was none before. That takes serious guts. So Joe Fenari is the CEO of HireCar. Joe, it is always a pleasure to chat with you. Thank you so much for coming on All Access today.
Great. Thanks, Spencer.
All right, have a good one. Happy holidays. Happy holidays. I remembered that time. Okay. Okay, we have to wrap here. I do want to say, though, if you missed my announcement at the top of the show, we are doing a promo with Ticker. Where's my video? There's my video. If you sign up for Ticker on ticker.com, you can get an Amazon gift card. I want to tell you all about it right now.
What is Ticker? That's right, Ticker with 2 I's, just like you. Because it's for you, for investing, for stock perks, for connecting you to public companies who reward you as a shareholder, as a brand lover. That's why people can't stop tickering. Ticker, where investors discover shareholder perks and consumers become investors in the brands they love. Ticker. Start tickering today.
All right, ticker.com/Benzinga. That's what it looks like on the screen. That's what the URL is. It's in the chat. It's in the description. Check it out. Ticker connects people, connects shareholders and brands, connects investors to those brands. So you can get paid, get rewarded just for owning a stock. So see what perks you qualify for today by going to ticker.com/Benzinga. And for viewers of this stream, you will receive a $20 Amazon gift card. All you've got to do is sign up and connect your brokerage. So you create an account, you confirm your email, and then you click the little box that says Benzinga All Access viewer or listener. And from there, they will send you your Amazon gift card within 30 days. So check it out. Ticker.com, TIICKER.com/Benzinga. Okay, I've got to hop because we've got Benzinga Live coming up now. No matter where to be live, I'll hop over there eventually. I won't leave AB by himself. I can't leave AB by himself because if that were to happen, he would light the building on fire, and we certainly can't have that. So I want to thank all of the speakers, all the companies we had on the show today. Actually, our last All Access of the year is going to be Thursday, this week, 2 days from now. So we've got the last one of the year coming up, and then going forward, it'll be recurring every single week in the new year. How are we doing on the like front? Can we get to 200 likes? Can we get to 200 likes? It's going to be tough. It's going to be tough. I don't know if we can do it. As always, if you have any feedback, please email us, shows@benzinga.com. There's a company you want to see or whatever, let us know. And then again, as a reminder, all the companies that were on the show today did partner with Benzinga to be here. It is one of the ways that we monetize the channel, monetize our content that we put out for free all day, every day. All right, I got to hop. Benzinga Live is live. Maybe, potentially, perhaps. I'm not sure. I'll catch you guys over there. This stream will end a redirect to that show. And if it doesn't, hey, that's AB's fault, not mine. Everyone, I'll catch you over there. And stay green if you're trading out there. I have no idea what the market is doing today. So I hope it's good.